last week. This week, it's about PCE on Friday and claims on Thursday.
Given the fact that there is this issue of how much is the deterioration in the labor market going to be also reflected in spending that, at least on the margins we're hearing, has been muted by a lot of CEOs. When you look at the bond market, I do think this week's auctions matter, just simply because this is the one theme from everyone who's trying to look past the noise, which is, i.e., ignore politics when you're trying to trade, and saying, regardless of who wins, their glut of supply is pretty dramatic. The fact that we've got $70 billion of five-year notes being sold on Wednesday highlights this feeling of how do we digest this at a time that whoever wins is going to be dealing with an overhang of fiscal and, frankly, inflation that might rear its head again.
This is about funding the mess that we've seen down in DC.
Correct.
And to carry on funding it. Let's switch up the board and get to foreign exchange. So euro-dollar, not much price action. Euro-dollar still in and around 109 at about 108.85. The headline of last week for me, away from the politics, it's about the FX market. To hear Donald Trump speak to Bloomberg Business Week and say, we've got a currency problem, and then to hear everyone on Wall Street turn around and say, what are you actually going to be able to do about it? Deutsche Bank this morning, we shared this quote a little bit earlier, I think it's worth repeating, Bramo. Tariffs and their associated stronger implications for the dollar are significantly more likely to be the dominant market outcome than policies to pursue a weaker dollar. It doesn't matter who you ask, the overwhelming consensus still remains, even if Donald Trump gets a second term and believes we have a dollar problem, they are going to be policies that lead to a stronger one.
Terry Wiseman also said that essentially, regardless of how you look at it, a Donald Trump presidency, all things being equal, will be more inflationary and will favor a bit of a stronger dollar just because of what's happened in the past. This goes to this question, though, what do you trust? How much do you put faith in some of the policies that Donald Trump puts out there? Do you take him at his word in terms of his priorities at a time when sometimes his word is somewhat conflicted in terms of the market outcome?
That's the latest on the price action under surveillance this morning. A flavour of our top stories. There is none other than this one right here. President Biden ending his re-election bid, passing the torch to Vice President Kamala Harris. She's the favourite for the Democratic nomination heading into the party's convention next month. We were looking for a challenge. It doesn't look like, as of things right now, as things stand, it doesn't look like we're going to get one.
It doesn't. So it looks like we're going to go into the convention knowing who's on the ticket. That's August 19th in Chicago. So it doesn't look like we're going to have this open convention and more chaos within the Democratic Party. Now it's about the Veep stakes for her. Who's going to be her running mate? Andy Bashir this morning, speaking on MSNBC, says he'll do everything he can to support Harris. He's endorsing her. And then asked if anyone has reached out to him. You know, maybe he wants a rose. He said it's flattering to be part of it. He's not really sure about the process, but he's flattering to be part of it. Wall Street Journal said he was one of those individuals that she made a phone call to last night.
Crude a little bit lower this morning. WTI, it's a break of 80. We're down about 0.6%, 79.62. There is a meeting taking place this week. We've got the Israeli Prime Minister coming to Washington, D.C. He's going to address Congress. There will be a meeting at some point between him and the President of the United States. And I want to reflect on something Peter Cheer of Academy Security said on this program in the last couple of weeks. The rest of the world is watching this instability in this country over the last few weeks. And Peter Cheer's words, and I'll paraphrase, but this is basically the essence of it. There could be some individuals, countries who look to take advantage of this.
Yes, they want to exploit what is happening in the United States, which looks like instability. Also, the fact of the matter is we have not seen the President of the United States, who said he's going to step aside and not seek re-election. We have not actually seen him say that to the American people. This all within a letter. Wall Street Journal editorial saying how that is not very good in terms of the U.S. standing on the international stage. When it comes to oil, Israel, Tel Aviv was hit over the weekend with a drone. The Israelis struck targets around a Houthi-led Red Sea port, potentially why we're seeing prices go a little bit higher. But that geopolitical risk, potentially that comes back into play ahead of November 5th.
This is what people have been talking about, why they thought Joe Biden would wait until after Netanyahu came to really make the announcement. The fact that he didn't raises just more questions about the timing and the process and, frankly, the appearance as well.
It felt very abrupt yesterday afternoon. It really did. And I think we've all got the same question. When are we going to hear from the sitting president, the President of the United States? As we all try and work out this election risk, the political factors in exchange markets, foreign exchange markets, equity markets, commodity markets, also looking ahead to a Fed decision next week. We've got a ton of data this week. PCE coming on Friday, jobless claims coming on Thursday. Mike McKee's managed to make it back to New York, which was quite the mission. I understand, Mike.
It was a little difficult, and I probably missed all the calls from Kamala Harris asking if I was available. But no, I was flying on a certain airline that had a lot of problems.
Well, we can share that airline. It's in the news. Delta cancelling a lot of flights. This is the hangover, the fallout from Friday, right?
Yeah.
What's been happening?
Well, I was 14 hours in the Jackson airport. Oof. Got a flight to Salt Lake City and spent 2 days in Salt Lake City because all my flights out of there were canceled. But the Delta employees in the airports were just marvelous. Professional, calm, cool, collected. And I don't know how they managed to do that with thousands of people lined up to talk to them.
Anyone who's been to Jackson Airport, great view out the windows, not much to do. So I'm not sure what you did for 13 hours. Mike, it's great to have you back. We're looking ahead to next week. Go through the data points for this week that you're super focused on.
Well, the big ones are at the end of the week. It's one of those where we get second quarter GDP. That's going to be an interesting number because a lot of it depends on inventory build. And there were some issues with automobiles not selling as much last month. But the bottom line is economists are expecting 1.9%, but Atlanta Fed GDP now is 2.7%. So somewhere, that's a pretty big range, but it does show the economy still growing. Jobless claims you talked about. One thing we forgot last week, and it's my fault for forgetting, is Hurricane Beryl in Houston. A lot of people in Houston, Texas was the state with the biggest number of jobless claims. So that could, in theory, go down. Economists are expecting it to go down, and then we wipe out all the concerns about the labor market until Friday when we get the PCE inflation numbers. And because we've talked about this before, you can pretty much figure them out once you have CPI and PPI. We're expecting drops again there. Headline number to 2.4, which has got to be in the range the Fed is looking for to start their process of cutting. So there'll be a little bit of talk about July if it comes in that way, unless it comes in much lower. But then it really sets us up for September.
You highlight why PCE sort of has already been revealed to some people just because you can calculate it just de facto with CPI and PPI, which is the reason why in some ways I'm more interested in consumer spending, especially in light of some of the warnings that we've heard from airlines, from different food operators, this idea that there is more sort of concern among consumers and discretion. How much are people expecting that to be reflected in the numbers, sort of flying in the face of what we got last week?
Well, the expectation is we see an increase from a 0.2 rise to a 0.3 rise in the month of June. And if that happens, that makes for a much better launching pad for the third quarter. But at this point, it looks like consumers are hanging in there. And that's the big thing in the retail sales report. Very strong under the headlines because auto sales we knew would be bad and gasoline goes up and down on price. But everything else was fairly strong. So if services spending comes in the same way, then the Fed is got to be pretty happy. At some point, we got to call it a soft landing.
Mike McKee in the room next week. Let's see if they call it just that, in anticipation of what many people think will be a rate cut in September. Also struggling with some of those flights. I know many of you have been. Check out the airlines in the pre-market, down across the board. Once again, this has been a real struggle. Even if you push the tech outage of Friday to one side, it's been difficult for the airlines. This started with Delta at the very beginning of earnings season, coming out and saying Q2 has been tough. We're down another 1% on Delta. United followed up with the same story, down by 1.1%. And then, Lisa, earlier on this morning over in Europe, heard almost exactly the same thing in a different market from a different airline. This time, it was Ryanair.
This is basically a 1-2 punch. On one hand, they're not able to charge customers an endlessly increasing fare, but also you're seeing expenses increase. Think about how expensive it was, this outage, for the likes of Delta and others that had to deal with canceled flights. They had to give people free, refocused flights. They had to talk about perks. They had to potentially even put people up in hotels en masse. This is an expense at the same time that they cannot offset it in the same way that they have been able to in the past.
Ryanair over in Europe down by 15%. That is a difficult day for that particular airline. Joining us now to discuss the week ahead and the Federal Reserve decision still to be made for the year ahead, Matt Raskin of Deutsche Bank alongside Earl Davis of BMO. Earl, I want to come to you first, and I want to understand where this economy is at. And I'll share the words of Mike Gapin over at Bank of America with you. He said, cooling, ? Yes. Cool, ? no. Is that how you would characterize this economy?
Yeah, I think that's a fair characterization, especially, when you look at the city, economic surprise index, that's at 9-year lows. So cooling, yes, but there's a lot of fiscal support underneath. So cool, no. So I fully agree with that assessment.
So Earl, how much do you see politics as sort of noise, and the sort of big story right now being that yields are going to remain higher for longer because of the strength, because of some of the inflation that you have talked about extensively?
No, you know what? I don't see it as noise. I actually see it as providing a great trade opportunity. And why I say that is both the Democrats and the Republicans are still going to have significant fiscal deficits. So that's supportive of the economy going forward. Having said that, you almost get like a free option on a steepener with a Republican win because of the deregulatory thrust that they will bring to the market. Bringing in that deregulatory thrust, that impacts small and medium-sized businesses the most in regards to a reduction of costs. Those costs being put back into business, and they are the biggest employers. It's not your Microsofts or your Amazons. It's actually small and medium-sized businesses. That could get a thrust, an economic thrust to the market. So you need risk premium for that, which is why we like the steepener now. We think it's a heads I win, tails you lose scenario, whether it's a bull steepener or a bear steepener.
Matt, do you agree with that? Basically, that we're looking at longer-term deficits in the long term, and near term, this idea that the Fed can either hold rates here or cut them, that's going to be a steepener regardless of who wins.
I would tend to agree with that. I think you, as Earl pointed out, on the election side and the outlook for fiscal, I think regardless of which party wins, we're looking at big fiscal deficits as far as the eye can see. I do think that as Trump's election odds go up, the odds of a sweep election also go up, and that is the scenario that's likely to produce the biggest fiscal deficits. That's inflationary. It also increases Treasury supply and should boost term premium, provide some steepening in yield curves through that channel. At the same time, as the Fed is moving towards a first rate cut, which seems very likely to come in September, we're naturally going to get some steepening in the curve that comes from that. So I do think both of those big stories that are at play in markets right now on the election and the Fed pivoting to rate cuts are supportive of steepeners.
Matt, do you think the market needs to take into consideration that potentially with Biden stepping aside, there is more momentum behind VP Harris?
I do. I mean, I think the developments over the weekend, over the past month, are shifting the range of possible outcomes coming out of the election. They're shifting the likelihoods of those different outcomes, and I think the market needs to take that into account. As I think you pointed out earlier, the move in predicted election probabilities over the weekend, are notable but not that big, and I think we've generally seen in rates at least. A response that's in line with what we'd seen previously as we got big shifts in the odds of Trump winning the election. And that tends to be, higher yields and steeper curves. And so I think as those odds are moving around, as the likelihood that, that the Democrats, win the presidency increase, albeit modestly, the market should take that into account. It should be reflected in somewhat flatter yield curves, which is what we've seen today. I guess the one thing that I'd point out is all of the dynamics that we talk about as being at play with the election, the prospects of more expansionary fiscal policy, the impact that can have on the level of yields and shape of the curve, those impacts on yields in the curve are also those things are also heavily driven by the outlook for Fed policy. And so as you pointed out, we get important data later this week. We have a Fed meeting next week. We get the next employment report at the end of next week. And so I just think those things are potentially going to swamp any effect that you see coming out of shifts in election odds from developments over the weekend.
Matt, I asked this question last night. I'll ask it again. So what matters more in August? Is it Jackson Hole or the DNC?
I think we're probably going to have good clarity around what will come from the Democratic National Convention ahead of time in August. I actually think Chair Powell's remarks at Jackson Hole are likely to be quite important. The way I see things unfolding from here, I think at next week's meeting, the Fed is not going to make any changes to the Fed funds rate, but I do think that they'll signal that a first cut is coming in September. I think what Chair Powell is likely to use his remarks at Jackson Hole to then do is frame the cutting cycle and provide some perspective that will probably help to temper any inclination that markets might have to price in a very aggressive Fed cutting cycle once they begin to cut in September. So I actually think that framing that we're likely to get from Powell at Jackson Hole is going to be quite important.
Oh, just to build on that, do you think the framing that we could get from Jackson Hole, from Chairman Powell on the issue that Matt describes, do you think it might be similar to what we've heard from the ECB?
That's a tough question, and the reason why is because of the fiscal impulse that we're talking about and deregulatory, that's actually extremely stimulative after the election. So I do think there will be some pointing towards eases, but they have to be tentative as to the significance or quantum of a possible easing cycle. So I think you have to watch out there. Having said that, I do think one important thing about August and about the bond markets in general now, and you could say it's because of summer, there's different reasons. There is a sense of complacency in the bond market. When you look at the volatility index, the MOVE index, we're below 100. It doesn't stay below 100 for long since COVID. So my expectation is that volatility will increase and will spike, whether it be DNC, whether it be Jackson Hole. I think those are two very real possibilities. Also, next week's Fed meeting, the market's only discounting a 2.5% chance of an ease. We think it's greater than 25%. So there's a lot of reasons here to expect the market to not be as complacent for as long.
Interesting. Wonderful to catch up with you, sir. Davis of BMO. And likewise with you, Matt Raskin of Deutsche Bank. Gents, thank you. Big week ahead. Looking ahead to next week, Federal Reserve decision, some jobless claims data on Thursday. Mike, just to come back to you just briefly on jobless claims. Given Hurricane Beryl and what you described as maybe some impact on the claims number of last week, how reliable is the incoming labour market data going to be over the next few weeks?
Well, part of the problem is that July is usually a very bad month for jobless claims accuracy because a lot of manufacturing companies shut down briefly to retool, particularly the auto companies, and that happens on a rolling basis. So throughout the month, you're not really sure whether the jobless claims are accurate or not. And that just builds into that whole situation. But if they go down, in part because people went back to work in Houston, then that'll be seen as a relatively good sign.
I guess the good news for the Federal Reserve is they're not in the business of forward guidance anymore. Can you imagine if they were? How do you construct forward guidance around this?
The good news for them is that they're in the quiet period this week as everyone talks about politics. Can you imagine if they had to actually weigh in on any of this stuff?
Yeah, although Chairman Powell gave us a different template last week of how to avoid it.
Basically.
Just don't answer questions.
Well, we've heard that before. Either way, to me, it's fascinating to see. Basically, we're in a black box that's clouded with a cloth over it that's tied up in knots. I mean, basically, we're talking about the data not being as accurate during this time of year, an election that's haywire, and a lot of people really questioning what the policies are going to be that they can analyze.
I've heard the Chairman Powell speechwriter watches this show. Do you remember the line from last August, navigating the stars of the cloudy skies? I wonder if they borrowed that line you just said. You'd have to repeat it, though, because I've forgotten it already. Black box under what?
Well, a cloth with a bunch of knots tied up all around
and clouds above it, too.
Yeah, clouds,
okay, good.
rain cloud.
That's sort of there, making notes now, I'm sure.
I don't think anyone's making
Let's
notes.
get you an update on stories elsewhere this morning. They're not. With your Bloomberg Brief, here's Danny Berger. Hey, Danny.
Hey, John. West Virginia Senator Joe Manchin has told CBS News that he will not be running for president.
I am not running for office. I could not believe that there was not going to be a primary process or a mini process. Other countries do it. I'm not looking for I don't need that as far as in my life, the attention that people think that when you speak up, you're just looking for attention. Why is everyone afraid to speak out?
Previous reports had suggested the independent lawmaker was considering a run for the Democratic nomination. Manchin also telling MSNBC moments ago that he is retiring. Delta Airlines is apologizing for canceling thousands of flights during the busiest travel weekend of the summer, as many of its systems failed following the catastrophic CrowdStrike outage on Friday. Delta CEO Ed Bastian blamed the impact on a significant number of functions that rely on Microsoft Windows operating systems, including its crew tracking tools, which rendered the airline unable to process large volumes of changes to flight personnel. Delta is still experiencing flight cancellations today. Morgan Stanley's chief U.S. equity strategist Mike Wilson sees the U.S. small cap rally losing steam. He wrote in his latest note that the recent outperformance is facing technical resistance and lacks fundamental drivers to carry on. More specifically, the rally lacks justification in terms of profits compared to past rallies. The Russell 2000 is up 6.7% this month compared to 0.8% for the S&P, driven by softer inflation and the rising odds for another Donald Trump presidency. And that's your brief, John.
Danny, thank you. Thanks for this morning. We'll catch up tomorrow. Up next on this program, we'll set you up for the week ahead. You're watching Bloomberg Surveillance.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays around the world right here on Bloomberg. Context changes everything. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
We're counting you down to the opening bell. Here's the calendar. The trading diary for the week ahead looks like this. At 11:30, Vice President Harris making her first public appearance since being endorsed by President Biden, giving remarks at the White House. On Tuesday, Alphabet and Tesla reporting results after the closing bell. Wednesday, more earnings from Ford and IBM. Plus, we'll get some US PMIs for you. Thursday, US GDP and another round of jobless claims. And we round out the week on Friday with UMich sentiment and PCE. I guess we've got to get some final thoughts. I said at the start of the program, it's like last week never ended. In fact, I have to say, July started, and then there was no weekend from there, Bramo. Things have changed a lot.
And it's all political, right? I mean, basically, there's just absolute political turmoil. I would say the real question for me this week from a market's perspective, as Emery will talk about the politics more significantly, is how much potentially some of the earnings can really take center stage if they really do provide more of a compass than the black box wrapped in a cloth with lots of knots around it.
And clouds and rain.
Of politics, you know, doesn't provide people with that clarity.
I'm excited for the South Lawn event that I would normally never pay any attention to at all. She's going to be talking with the championship teams of the NCAA, but now it's a big moment. It's the first time she's going to address the public since being, being endorsed by the president to take on the top of the ticket. What does she have to say for herself? And then TBD, when the President of the United States actually speaks, he drops this letter, and we still have not seen or heard from him, and we don't have a date yet.
We're waiting for that date and what that schedule looks like. We've got a lot to work through. We'll try and get things started in the right way tomorrow morning. Here's the lineup. Ross Kostrick of BlackRock, Isa Boltansky of BTIG, Democratic Congressman Jake Ochinklos of Massachusetts, and Jill Carey Hall of Bank of America. From New York City, this was Bloomberg Surveillance.
world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper.
I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
Futures are rising on the first day of the trade when Biden isn't running for president in 2024. 30 minutes until the start of trading. I'm Matt Miller.
I'm Shanali Bassick.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, an election reset. Vice President Kamala Harris began shoring up support for a White House run while Trump's campaign makes contingency plans.
As Democrats plot their next steps, we'll get reaction from Virginia Governor Glenn Youngkin.
And muted markets, investors looking beyond Biden's exit, gearing up for a flood of earnings and key economic data this week. Let's take a look at where we stand. About 30 minutes until the opening bell. We are rising, actually, in futures. The S&P 500 currently up about 0.6%. You think about the volatility that we saw last week, not seeing it right now. Big tech up even more, up 1% pre-market on the NASDAQ 100. Treasury yields, meanwhile, a little bit of a rally in the bond market, currently down about 2 basis points, Matt.
Take a look at the spike that we had seen in VIX contracts surrounding the November election. Here at the end of the chart, you'll see a big jump in September, October, and December futures, but they have calmed after President Biden stepped away and Kamala Harris took his place as the Democratic candidate for president in 2024.
And Matt, there are some stocks moving onto the surface. I'm taking a look at CrowdStrike because it continues to be weighed down by the fallout from last week's faulty software update. The stock now facing a wave of analyst downgrades heading into Monday morning. CrowdStrike down almost 5% pre-market.
All right, we had an amazing Sunday, right? I mean, everybody, I'm sure, was glued to the television, all over the wires, checking out the news after Biden stepped back, only telling his team 1 minute before tweeting it out, and then coming out and supporting Kamala Harris.
Yeah, it was pretty wild seeing those headlines cross at about 1:45 p.m. And what's been staggering is watching all the money flood in. According to Act Blue data, Democrats have raised more than $50 million online since Biden announced he was stepping down. Really, talk about cash on the sidelines there.
And that's when it comes to the race itself, but what about the big money in the markets? It's interesting. You see some of those Trump trades fluctuating through the weekend. You pointed it out this morning, this idea that the steepener kind of unwound over the weekend, but DJT still up pre-market, I believe. So it's just a trade at the end of the day.
All right, Vice President Kamala Harris is set to speak to the media this afternoon, where she may officially begin her presidential campaign. Pangea Policy founder Terry Haynes spoke earlier on her potential running mate.
They need a geographic balance ticket, and they need frankly, I think they need a swing state governor on the ticket. That strikes me kind of as Captain Obvious. They've shown weakness in the swing states. It's capturable. They need somebody that actually kind of knows that ground and can speak center speak more than anything else, and it has a background of being successful with centrist voters.
All right, for Vice President Harris's campaign, we're joined by Bloomberg's Anne-Marie Hordern. Really, for the entire election coverage, we have Anne-Marie Hordern. What do you think about the running mate question? I mean, everyone's talking about the possibility of swing state governors, but you've also got people like astronaut Mark Kelly, Senator Mark Kelly, in the running.
Well, that would potentially be a play for Arizona, so still a swing state, not one of the governors, though. We do know, according to Wall Street Journal reporting, that she got on the phone last night with three really critical people. Governor Roy Cooper of North Carolina, you had Andy Beshear of Kentucky, who today was asked about it, and he said he's flattered by the idea, fully endorses Kamala Harris, and would maybe step aside from his job if he was asked to serve his country in a different way. And Josh Shapiro of Pennsylvania, very interesting, because this is where Donald Trump really wants to take the fight. It's these three critical swing states: Michigan, Pennsylvania, Wisconsin. So Josh Shapiro would be incredibly interesting, because this is a way potentially get out the votes in a state that for the Democrats are really a must-win.
And can you just talk to us about sort of the tick-tock of the final moments of the Biden campaign? I mean, to see, again, those headlines, 1:45 p.m. yesterday, that statement
right,
okay.
1:45 is when apparently he told the campaign.
That's true. So, I mean, that sort of speaks to sort of the disorganization, and then the fact that the statement came on X. It wasn't an Oval Office address. What did the urgency look like there when it came to actually coming out?
So I still think we're trying to figure out exactly why they decided to do it this way. I think the president was probably dragging his feet, oohing and ahhing for a couple of days. I mean, covering President Biden, one thing is clear. He does drag his feet with a lot of decisions. He waits. He wants to listen to everyone in the room. And then, of course, he probably looked to his wife for his last final gut check. And then when the decision was made, they moved quickly to post it on Twitter. We still have not heard from President Biden. Now, he does have COVID and he's isolating, but he also did run a campaign, largely a lot of the time, doing interviews, speaking to the American people in 2020, speaking to the American people from isolation. He was during COVID, it was during the pandemic. So there's a lot of pushback on why we have yet to hear from him. Potentially, maybe some of the individuals were putting so much pressure on him to act that where a lot of these leaks were coming out in the media, potentially they were going to say, we're going to go public with some of our data that we do not think you can win November 5th. But we are expected to hear from him this week. In that letter, he did note, I'm going to address the American people later this week, but we still don't have a date. We don't know when we're going to hear from him. What we do know, we're going to see Kamala Harris today.
A lot of uncertainty, and that's our thanks to Bloomberg's chief political correspondent, Anne-Marie Hordern, who is also, of course, co-host of Bloomberg Surveillance. Now, for more on the risk in the markets and the campaign itself, we are joined by Charles Myers, Signum Global Advisors chairman and founder. Charles has over 25 years of U.S. political and electoral experience advising candidates, including Hillary Clinton and Joe Biden, of course, who both have come out and endorsed Kamala Harris. And Charles, if you think about the biggest challenges that Kamala Harris has as she seeks to A, secure the Democratic nomination, and B, looks to take on Donald Trump, what are those challenges?
Well, I think the first is she has to unify the party, which seems to be happening very quickly. In fact, all the endorsements that have come out, not only President Biden's, but the Clintons, an increasingly large number of Hill Democrats, most donors, and then also some of the potential challengers to her. Governor Newsom has endorsed her. Whitmer has said she's not going to run. Now Manchin just came out literally in the last 20 minutes to say he's not going to run. So, unifying the party is happening quicker, even faster than people expected. Secondly, she needs to pick a running mate. You just spent time on that on your show. I think Mark Kelly of Arizona is very much in the top two, along with Cooper of North Carolina, but there are others. They need a swing state. Third, she really needs to introduce herself as a presidential candidate, along with her running mate. And lastly, dispel some of the concern about her 2020 presidential race, where it was very short-lived and not very well run. So that's a lot to do, and the election's 3 months away.
In terms of the effects on the markets, Charles, we have been trying to divine what the dollar trade is telling us, what Bitcoin is telling us, how the curve steepener looks. What's your best take as someone who advises hedge funds and high net worth individuals on the intersection of, Wall Street and Washington?
So what we've been saying is, for our clients that are positioned for the Trump trade, to maybe be a bit cautious, because I do think that that's going to fade a little bit here. When you have a huge shakeup in an election, this is a historic shakeup with a sitting president who's won the primary, now dropping out of the race. You typically see quite a bit of enthusiasm and momentum behind the new candidate. And then she's going to pick her running mate. Then they go into the convention mid-August. I think she'll close the gap. Kamala will close the gap in the polls with Trump, maybe even pull ahead. So I think the Trump trade, at least in the short term, there's some risk of it fading a bit. What we're getting asked about is what is the Harris trade, and the two things that come to mind immediately are renewable plays, but I think it's a bit early to really be trying to decide anything on our election. But secondly, if she wins the White House, I do think it'll be she and her administration, like the Biden administration, will be a little less pro-crypto, as certainly Trump and Vance are.
Yeah, of course, a lot of ifs there, a lot to get through before we get to the actual election and perhaps what that Harris trade might be. But let's talk about the convention first, because, of course, this is a very narrow timeline, and there's a lot of questions about what the convention will actually look like. We heard from Joe Manchin saying today that Harris has basically been anointed, but what are the possibilities that we could see in mid-August?
Yeah, so, one of the reasons, the main reason I believe that the Obamas and Nancy Pelosi and Chuck Schumer have not endorsed Kamala is to make sure that it doesn't look like a coronation, that it will go to the convention, and it will be the only people in the country that can decide whether or not Kamala Harris will be the nominee are the just under 4,000 delegates at the convention. It's a simple round of voting. It's a simple majority. I think she wins in the first round. And if not, it goes to the second round of delegates and super delegates that are party officials. She'll win in the second round, but I think she wins in the first round. So any notion that this is a coronation, I think, is a little misplaced. It still goes to the convention mid-August, and it's up to the delegates.
How much of a time crunch does that put on her? Because by the time you get to the convention, you're really looking at less than 80 days to the election.
Oh, absolutely. That's the reason we don't think President Biden's going to resign the presidency. There's going to be increasing calls for Kamala to invoke the 25th Amendment and bring a vote to the cabinet to remove the president, or that he resigns the presidency. We don't think that's going to happen, precisely because of your question. Trying to literally launch a new campaign, a relatively new campaign, in 3 months and run the country, I think, are a lot to ask. I think President Biden stays in the White House and Kamala runs the campaign. They're going to retool it. It's already happening very quickly. It's a condensed campaign. Sometimes those are better. Ask our friends in the UK. Shorter campaigns can be better.
Yeah, Republicans, though, already making that threat to the presidency and making maybe a legal threat to the Harris campaign. Is it substantial or substantive when they say, it's not fair to pass the money that the Biden-Harris ticket has raised to a sole Harris ticket?
No, there are two potential legal challenges. One is the money, but the truth is all the money was raised, or almost all of it, into the Biden-Harris Victory Fund. So she gets the money instantly, and they can challenge that. I think they're wasting their time. The second, because she will get the money, and the rules are pretty clear. The second challenge is for Biden, for the states and at the convention to swap out Biden's name for her name. And that legal challenge also will be, I'm not even sure it makes it to the courts, but will be thrown out because Biden isn't officially the nominee. He has not yet been confirmed by the delegates. If this were at the convention, if this were after the convention, some of those legal challenges might hold. But the truth is, he has won the primary. He's not the nominee yet. So I think all of the legal challenges, including from the Heritage Foundation, are all going to be a waste of time.
Charles, what do you think this means for the Trump campaign? Of course, you think about what we learned and heard at the RNC last week. It was a lot of anti-Biden messaging. Obviously, they're going to have to retool that.
Oh, absolutely. I mean, you know, Trump was on CNN last night saying that they want a refund because they've spent so much money on Biden. The truth is, Biden's decision did catch a lot of people by surprise. I think it was increasingly clear he would need to drop out. I think his timing was a bit of a surprise, even to some of his own staff. And it didn't give, therefore, the Trump campaign enough time also to kind of, retool. They will, both sides are very well funded. They will find a way to retool pretty quickly. But, I think the bigger issue is you now have a Democratic nominee and soon-to-be candidate, confirmed candidate, who's uniting the party, very well funded, with a lot of enthusiasm, and very importantly, will drive more turnout by women, young voters, and black voters in the swing states. If I were in the Trump campaign, I'd be sweating today. I think that she's going to give him a real run for his money.
Charles, great to get your take. Thanks so much for joining us this morning. Charles Myers there of Signum Global Advisors. Let's get another quick check on futures. We are up across the board this morning with the S&P futures up 0.2%. You see NASDAQ futures up more than 1%, and Russell futures gaining as well, about 0.6%. So strong gains across the board, whether you look at the big mega cap stocks or the small caps. Coming up, Keith Lerner, Chief Market Strategist at Truist Advisory, joins us. He says Washington's influence on markets may be overstated. This is Bloomberg.
The names that move markets are on Bloomberg.
With all due respect and thoughts and empathy and sympathy for the people who are suffering at the moment, and there are plenty. It's not just Ukraine and Gaza, it's in many other corners of the world as well. But I'm constantly surprised by the level of resilience and the capacity to actually bounce back from those traumas. So I have faith in the human beings and their capacity to respond to adversity. We've seen it. Look, earlier in the pandemics, we thought that the world was coming to an end, right? It hasn't. Nobody thought that vaccines would come up in such a short period of time. And every time we have to constantly resurrect this spirit of resilience.
But are you hopeful that
I'm always hopeful. Oh, come on, we have to be. We have to be.
Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's time for High Interest to look at what's making headlines around the world. China caught investors by surprise with an interest rate cut overnight. The PBOC cut the 7-day reverse repo rate to 1.7%. The move is the central bank's first reduction in almost a year as the country attempts to prop up growth. An investment partnership between Ray Dalio's office and an Abu Dhabi royal has been delayed as Bridgewater grapples with the legal terms of his exit from the hedge fund. One of the questions is whether the billionaire founder may use the company's intellectual property after he signed a non-compete with his former firm. And Kimberly Cheadle, the director of the U.S. Secret Service, is about to face a barrage of questions from lawmakers who seem to want her out of a job. Cheadle is set to appear at a congressional hearing that will examine how the shooter behind the attempted assassination of Donald Trump eluded security and wounded the Republican nominee. Katie?
Well, going back to politics, our next guest says that presidential policies have less of an effect on markets than expected. Joining us now, I'm thrilled to say we have Keith Lerner. He is Truist Advisory co-CIO and chief market strategist. And Keith, I'm going to go to the first bullet in your note this morning that the past 3 presidents have seen the S&P 500 compound at an annual rate between 12 to 15%. And given that history, how worked up should investors specifically, not traders, investors be this morning?
Well, first, great to be with you. And going back to that study you just mentioned, we actually used that study also a couple of years ago during the last election. And our work says this: elections matter, but they're not the only thing that matters. So again, I don't want to say that some of the policy shifts aren't going to make a difference. But when you look back historically, conventional wisdom around what sectors and how the market does around an election tends to be often wrong. And why is that? Well, because other factors matter. What's the direction of the economy? What's the direction of inflation? What are central banks doing? What is profitability doing? And if you think more recently, like actually about 2 weeks ago on a Thursday, we had a CPI report that we all know where we saw small caps have the the 4th largest outperformance to large caps we've seen since 1979. And why was that? It was because they had underperformed for about 6 months at the greatest pace we've seen in about 20 years. And then the catalyst was that CPI report, and then small caps ripped, right? So now maybe you can say some of the elections and the polls have, amplified that move. But then overnight, something totally different. We saw China, drop rates a little bit, right? So this morning, you see, what happened with, with maybe the polls getting a little bit tighter, and you can say, okay, well, maybe China's getting a relief because of that, but maybe it's getting a relief because the interest rate cuts overnight.
Let's talk a little bit about that rotation trade. Katie loves it. She's got the Russell up on her screens all the time. Does that continue, or do you think it's run out of room at this point?
Well, I ultimately think there's going to be more to it, but I will say the next few weeks, going back to other factors matter more. This week, we have big cap tech coming to the forefront, right? We have Alphabet coming out with earnings. We have Tesla. And then next week, we have Meta and Apple as well. So I think that's going to be important. And on a short-term basis, I mean, just for this week, the NASDAQ or the technology sectors underperformed or pulled back about 6 or 7% around support. So we're bouncing this morning. And then small caps had a big, overshoot. So I think maybe this week you maybe see a little bit of reversion kind of back to tech. But as we look over the next 3 months or so, I do think this trade for small caps likely has a bit further to go. Part of that reason is before this big move up, small caps were, as I mentioned earlier, underperforming by the most we've seen since COVID, and before that, the technology bubble. So I think there's some folks that are offsides, and I think positions still offside. As you think about 12 months or longer than that, I think it's going to be hard because the earnings have not moved up. But again, to your question, I think the small cap trade ultimately has more legs, maybe a little bit of a consolidation first, though.
Well, Keith, not to torture the English language here, but should we be calling it a rotation, or is this just a catch-up trade, a broadening out, if you will?
I think you can call it either. I mean, in some ways, it is a catch-up because, we had the S&P 500 up about 19% prior to this rally, and then small caps were negative for the year. So you're seeing that road band that was so stretched, and now things are kind of coming back in. So maybe that's a little bit of a catch-up. On the same token, I don't think you're seeing the headline market fall apart. You're seeing overextended areas like semiconductors and NASDAQ pull back. Semiconductors are down about 10, 11% off the highs, but they're still up, more than 30% for the year. Technology is still up more than 25%. So I think it's a little bit about a little rotation and a little bit of a catch-up trade all in one. I wish I had a great word for that.
When you're thinking about some of the big cap stocks here, the big cap tech names here, you still have to remember that last week, the Magnificent Seven as a group sold off about 5%. The S&P was down almost 2%. What is the tone under the market here, Keith? Is there still a lot of fear given where valuations are right now?
Well, listen, I do think there's some fear, and as I talk to individual investors, they've never really truly embraced this market because if you look back the last 20 years, they've been through a lot, like, you know, the global financial crisis, the technology bubble. So there's a lot of skepticism as we make new highs. But I think going back to the question about rotation is the bloodline of a bull market. I still think we're in a bull market that's to be respected at this point. So again, I would expect more of these kind of shifts as we go along, but kind of rotation where the headline market still kind of holds up and other areas actually participate, I think is actually a healthy sign. I think by the end of the year, I think you will see money rotate back towards tech because that is still the secular story of this bull market.
All right, Keith, really great to get some time with you on this Monday morning. Our thanks to Keith Lerner of Truist Advisory. Now, coming up, we'll take a look at the companies making the most social buzz today in our Social Climber segment. Up next, this is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check of what's going on in futures. We are up 2/3 of 1% on S&P futures ahead of the open in just about 6 minutes' time. NASDAQ futures up 1.2%. So some big gains for big tech as we digest the political news that we got over the weekend and prepare for the big earnings news that we're going to get throughout the week. Katie?
All right, it's time now for Social Climbers. The company's making waves this morning. And first up, Delta is apologizing for canceling thousands of flights during the busiest travel weekend of the summer. Many of its systems failed following the catastrophic CrowdStrike outage on Friday. We heard from CEO Ed Bastian blaming the impact on a significant number of functions that rely on Microsoft Windows operating system, including its crew tracking tools, rendering the airline unable to process large volumes of changes to flight personnel. Next up, we have Tellurian, shares soaring more than 65% in the pre-market. The Australian gas producer Woodside, it's agreed to buy the US-based LNG project developer for about $900 million. Now, Woodside has been one of the most vocal energy companies in arguing that more gas will be needed to complement the expansion of renewables. And finally, Starbucks. The Wall Street Journal reporting that the activist investor Elliott has built a sizable stake in the coffee chain. Now, Elliott has been pushing Starbucks on ways to boost its stock price. And guys, that is sorely needed. I was just checking. Starbucks shares currently down more than 16% year to date.
What is wrong with Starbucks? I don't understand. You know, there used to be a Starbucks in this building. They got rid of that. There's one across the street here. It's always packed. What's wrong with this company?
It's expensive coffee. And listen, Bloomberg Intelligence thinks that same-store sales could fall this year. I've got to say, one thing that I find fascinating about the Starbucks story, when I talked to activist defense bankers, last year they actually saw the unions, the employees, as the biggest threat, and they thought about that as an activist. Lo and behold, now you have the biggest of all actual activist investors stepping in.
Yeah, that union pressure has been real. I do have actually some more on-the-ground reporting to add. The Starbucks across the street closed down.
Really? So every Starbucks around here is closed?
It closed down in the last 2 weeks. Now I have to get Starbucks near my house before I come to the office in the morning. It's very inconvenient.
Do you not just drink? I know you drink the drip coffee from upstairs. Right?
I was always a Dunkin' girl, but I did convert this weekend, if that counts for anything.
It sort of does. Maybe that'll boost the bottom line. We'll have to see.
Well, anyways, coming up, we're going to speak to the portfolio manager of one of the top performing funds over the last 12 months. We're going to talk to Dan Chung, CEO and CIO of Alder next. Maybe you'll talk to Katie about those small caps. Stick with us. This is Bloomberg.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
This is Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. We're looking at futures that are up across the board with just about 18 seconds to go. Take a look at the opening bell here on the New York Stock Exchange. The Greenbrier is celebrating 30 years of listing. Over on the NASDAQ, you have Global X ringing the bell. As I said, we have futures that were higher across the board with gains of 2/3 of 1% on the S&P, gains of more than 1% on the NASDAQ. Let's watch watch these indexes as they open and look for the individual stocks moving the most. For that, we go over to Katie Greifeld. Katie, what do you see?
Let's take a quick look at the majors right now. Of course, as the bell rings, you can see the S&P 500 currently up about 0.7%. The NASDAQ 100, big tech back in charge, up about 1.2%. Again, we had a lot of volatility last week, maybe a little bit of a relief rally right now, including on those small cap names. The Russell 2000 up about 0.4%. But one stock to watch at the opening bell, of course, is Verizon. Lower after reporting operating revenue this morning that missed analyst estimates. The company's weak growth really overshadowing those surprise gains that it saw in the number of fixed wireless customers. Sonali, shares currently down about 4%.
Katie, I'm also keeping an eye here on shares of Bank of America. They're slipping just a bit here after Warren Buffett's Berkshire Hathaway sold about 34 million shares in the bank. But remember, Berkshire still holds more than 998 million shares. Bank of America now just down 0.5%.
All right, and CrowdStrike is weighed down by the continued fallout from a faulty software update that brought global IT down for a long time at the end of last week. Let's get a closer look at CrowdStrike with Bloomberg's Abigail Doolittle. Abby?
Yeah, Matt, we now have the shares down for a 5th day in a row. This is a 6-day chart, so we can really see this decline. Now, this is just the one-day change. So today down 7.3%, last week down 20% or thereabouts. So in the course of 5 days, roughly down more than 25%. Of course, the company at the epicenter of that global IT outage affecting 8.5 million devices that rely on the Windows operating system. When we connect this with the technicals, because we have a lot of analysts downgrading the stock today, citing reasons such as new deals, resistance there could be to new deals, plus it's the last 2 weeks of the second quarter. By going into the Bloomberg terminal, we're going to see that this stock is right down on its 200-day moving average. And actually, today, this action down 7% on the day, down below that 200-day moving average. This is a fancy way of looking at the long-term buying support, slicing right through it, telling you investors in this stock were totally surprised. The last time we saw this on such a definitive basis, late 2021, ahead of that very difficult 2022 for stocks overall. It's unclear if that's ahead, but this is an ugly chart right now, a broken chart, Sonali.
Abigail, we thank you so much for your analysis. And joining us now for more analysis, Dan Chung, Alger Chief Executive Officer, Chief Investment Officer, and Portfolio Manager. The Alger Capital Appreciation Fund has been rated one of the year's top performing funds, thanks in large part to its heavy tech weighting. But of course, Dan, we know for you, not all tech names are equal to you. So when you think about the dispersion you're seeing in the tech world, what do you like, what don't you like?
Well, we're still very much positive on semiconductors and semiconductor capital equipment, which are some of the leading AI businesses, as well as they're in an industry that's really an oligopoly. So ASML, for example, had issues last week, but this is one of the world's leading companies in tech and essential to semiconductor development. On the flip side, you know, we're more cautious actually on a lot of the enterprise software names and even software generally. I think AI will present some challenges. In particular, AI significantly drops the time and the cost to create software. And so I think we'll see new software competitors emerging in that industry over the years.
Are you at all concerned that we're getting too early a start on this AI enthusiasm? You know, just like in the tech bubble when everybody was psyched about the internet and ran up the prices, but then we came down. And of course, now the internet turns out to have been a revolutionary technology, but people were just a little too early.
Right. So I think it's actually both. I think we're a little too early in expecting any real results in terms of revenues for most companies. Obviously, NVIDIA has seen huge revenues from AI. But for example, we think software, it's still to come. So a little early for software names to be showing great AI results. In the overall AI cycle, we're still very early.
Yeah, it's really fascinating to think where we are sort of in that cycle. It seems like it's too early to pick winners on the software side. NVIDIA, of course, that's a home run, but maybe getting long in the tooth. I want to talk about the specifics of your portfolio, though, because 40% of your outperformance over the last 12 months was driven by tech. Tell us about the other 60%, though, that wasn't necessarily just tech.
Right. So, you know, we fundamental research shop and run a very diversified portfolio across sectors. And so we had 20% came from healthcare, 20% from consumer discretionary, and 20% from internet/e-commerce, and then, you know.
So tech adjacent.
Tech, well, we really like tech-enabled businesses because every business really today uses a lot of tech, as we saw with the CrowdStrike
Learn that
issues.
painful lesson.
And of course, it's a way to improve efficiency, both on the front end, customer service, revenue generating, as well as efficiency on, say, logistics and delivery. And so we are very focused on tech, companies that are focused on enabling their businesses through tech.
Dan, how do you feel about some of these Mag 7 names heading into earnings? Are these moments for you to be buying or taking some profits now, and which names?
Well, we think we're in a stock picker's market, so some names that have come in recently we are quite bullish on. So Microsoft we remain very bullish on. Amazon we remain very, very bullish on. I would say Tesla is sort of in a lull. They don't have much new product introduction now. The Cybertruck is interesting, but not nearly big enough to move the needle. And they're having some issues. The robotaxi rollout was delayed. So, the example of a Magnificent Seven, we're a little bit more cautious near term.
How do you fold in, the political news or, legal rulings? I note that Stanford was where you got your undergrad, right? So that explains the tech. But then you went to Harvard Law, and then you clerked for a Supreme Court justice. Right. So when we get something like the Chevron ruling, do you fold that into your analysis of stocks, or is that stuff, does it not have an immediate effect?
It doesn't have an immediate effect, although occasionally we will see legal rulings and look for companies that are sort of in the crosshairs and realize that sometimes we have a little bit of an inside advantage just from the legal experience at the firm to take a look at those situations.
We have less than a minute left with you, but again, going outside of tech, I'm looking through your list. I see companies such as Deckers, DraftKings, for example, and we talk all the time about this stretched consumer, but it seems like you still see pockets of strength there.
Yeah, those are great examples. The American consumer, first of all, is doing relatively well. Unemployment is still low, wages are still going up, maybe, and so we look for who are the companies and the brands with the hot products, the emerging category definers. So Deckers is actually really interesting because it's both Uggs, which are beloved for decades now, but also Hoka. And Hoka has really come on, is on fire really in the running shoe category.
You're talking to a Hoka girl right now.
I love Hoka.
Okay, so there's Hoka. We're going to see a lot of it in the Olympics. And then DraftKings is another example. Online sports betting is a new industry, but it's a very old pastime. And technology enabling it is making it much more exciting for millions of people.
Dan, great having you on the program. Thanks so much. I hope you can join us again very soon. Dan Chung there of Alger. Let's head now to Farnborough, the International Air Show there. Our own Guy Johnson is standing by with Glenn Youngkin, the governor of Virginia. Guy, take it away.
Thank you very much indeed. Yes, we welcome now our radio and our television audiences together as we speak to the Governor of Virginia, Glenn Youngkin. Governor, thank you very much indeed for stopping by once again to join us.
Great to be with you. And we were together last year in Paris, and here we are in Farnborough, and there's a lot of planes flying today.
We've hopefully got a quiet patch in the air display that you and I can have a conversation and we can both hear each other. So that's fantastic. Look, the big news obviously over the last 24 hours is Joe Biden stepping aside. Yeah. A, is this a surprise? B, what does it mean, do you think?
Well, so I'm a Republican governor, and so
Yep.
I'm seeing it from the other side, but the amount of pressure that his party was placing on him to step aside was enormous, and there has been chaos in the Democratic Party, and we've all watched it with the performance, of course, of Joe Biden's administration and the realization that Donald Trump is now ahead in polls in states that Joe Biden won by 10 points, like Virginia, where Joe Biden won by 10 in 2020. And now Donald Trump is either even or up in the polls. And on top of that, you really do see Joe Biden faltering on his ability to campaign. So, no, not a huge surprise. I do think that it's important that the polls really haven't moved much in the last day. Right. And I think that reflects the fact that Virginians and Americans recognize that it was the Biden-Harris administration, and she owns the performance, and it's not going to be any different than the one that Joe Biden had.
Sounds like you think they should select somebody else.
Well, it's their choice to select who they want, but I will say that they haven't really selected anybody yet, and I do think the chaos that we've seen in the Democratic Party selection process is only matched by the chaos that they've unleashed on the world and the country. We've had foreign policy chaos, and I firmly believe that if Donald Trump were president, we wouldn't have war in Ukraine, we wouldn't have the chaos in the Middle East that we have, nor would we see China threatening Taiwan like they are. And if Donald Trump were president, we would certainly have a secure border, and therefore every state like Virginia wouldn't be seeing the violence, the drug overdoses, and the illegal immigrant crisis that we've got. And if Donald Trump were president, today, I don't think we would have seen the runaway inflation that Joe Biden unleashed and Kamala Harris on America.
So if it is Kamala Harris, do you think Virginia is still winnable? Does it change the arithmetic in any shape or form?
I think that Virginia is still in play. Right. And what we're seeing, of course, is Virginians are stating that they want strong leadership, not weak leadership. Yep. They know that Kamala Harris and Joe Biden led this administration together, and that track record, it's her track record. And I think that Americans are reflecting the same sentiment. Yep. They're ready for strength in the White House, not weakness.
Why do you think that the Ukraine war wouldn't have happened if President Trump had been around and running things at that point in time?
Because I think he projects strength. Right. And we know that there is peace through strength. And Joe Biden, starting with his disastrous withdrawal from Afghanistan, all the way through to placating China, to empty threats on the international stage, only elicits other countries to do bad things. I mean, he completely funded the Iranian assault in the Middle East, because when Joe Biden became president, he undid all of the sanctions and all the isolation that Donald Trump had placed them in.
Let's just stick with Ukraine if we can for a moment. Would the Republican Party continue to support Ukraine? Should the Republican Party, should President Trump and his vice president continue to support Ukraine? Do you think that aid should be there?
Well, let me just begin with the clear statement that the Republican Party as a whole is for defeating Putin. I think what we'll see, of course, is all elements brought together. First thing we'll do is we will secure the border. And that has been the biggest complaint from the Republican Party, is we're sending a lot of money overseas and we haven't even secured our own border. And I think on day one, President Trump will secure our border and stop the chaos that has ensued with illegal immigration. Listen, we've had terrorists come across the border, and we had two illegal immigrants try to crash the front gate at Quantico Marine Corps Base in a box truck in Virginia. And of course, the free flow of drugs is killing people left, right, and center. We have 5 a day that on average die in Virginia. Job one, secure the border. And then I do believe that support around the world in order to bring peace back through strength will be real. And this is the double approach that I think we'll see under a Trump administration.
Because from a European perspective, it looks like we're going to see a more isolationist government were Trump to win.
Well, I do think what we're going to see is a government that is, one, going to be very clear about what we're going to do, and one that is going to require all of our partners to play a full role. And I believe our partners will. I think what
does it playing a full role mean then? Is that 2.5% NATO? Is that 3.5% NATO? What is that?
Well, I think historically it was asking NATO to pay 2% of their GDP in defense, and we've seen a lot of the NATO countries come there, not all of them, but I think this is also a recognition that Putin is not going to stop at the Ukraine, and everybody needs to do their fair share.
Yep. So is 2.5 enough? Is 3? Where's the number in your mind?
Well, that's going to settle out as we see what the overall spending is going to be to do what we need to do. But I will say this, that I think that the United States will constantly be a great partner, but we also require great partners. And I think that's really that's what Peace Through Strength is all about.
The debate here at the Farnborough Air Show is, if we have to spend more money, we're going to try and spend it here. A lot of the defense companies are based in your state. You comfortable with that? If Europe's going to spend more money, should Europe spend that money domestically?
Well, again, there's going to need to be a capabilities match to the need, and a lot of the capabilities have been developed in the United States.
Do you think Europe's capable of doing that?
I think there are certain elements, yes, and there are certain areas where the U.S. capabilities are going to be paramount. And I think the combination of that is really important. We've got a lot of European companies that want to come set up in the United States. A lot of them want to come to Virginia. It's one of the main reasons why I'm here. You may have heard we were ranked top state in America for business, and that's one of the reasons why a lot of them want to come to Virginia. But this idea of European companies coming to the United States and manufacturing and building is really important. And I do think the blending of capabilities on the global stage will provide the best outcomes.
One of the reasons they might be coming to the United States to manufacture is because they're worried about tariffs. Should they be worried about tariffs?
Well, I think they should be worried about tariffs if their country is imposing tariffs on the United States goods. And again, free trade has not always meant free trade. And I think it needs to be fair, and reciprocal. And when we look at just the evolution of the trade agreements with China over the last few decades, China had unlimited access to the U.S. market, restricted access to their market, and it wasn't until President Trump struck a really tough China trade deal that we began to really treat them like they are, which is really an adversary who's trying to dominate the world, and they're doing it, yes, through economic coercion and imperialism, but also through military saber-rattling, and their surveillance of the world is unparalleled, and so we have to treat them as such, and that means we've got to stand up and use the tools in our toolkit in order to combat it.
Would those tariffs, with the tools that you're talking about being in the toolkit, if they were applied, do you think that's inflationary for the average American?
The short answer is competition is what combats inflation, and as long as we have strong competitive markets, then the short answer is most likely not. But what we do need to recognize is that what is inflationary for the average American is unlimited runaway spending, which is what we saw in the Biden administration. It was irresponsible. They flooded the market with government spending on an unnecessary basis, and that's why we saw inflation like we haven't seen for four decades. And that's why the average American, when they go to the grocery store, they literally, it's a gut punch every time they go in. Gas prices are run away from them, and why 66% of Americans are living paycheck to paycheck because they can't keep up with the runaway inflation we've seen over the last 3.5 years.
Governor, great to see you. Thanks for stopping by to see us. Always a
God
pleasure.
Bless you. Come to Virginia.
I will look forward to it. I've been, I love it. Thank you very much indeed. Governor Glenn Youngkin of Virginia. Back to you.
Our thanks to Bloomberg's Guy Johnson and, of course, Virginia Governor Glenn Youngkin, speaking at a very pivotal time in the electoral race right now. Now, coming up, Abercrombie & Fitch gets a boost from J.P. Morgan. More on that and other stocks as well in Top Calls today. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper.
I talk more about culture today than I talk about numbers. It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
All right, it's time now for top calls. Some of the analyst action in focus this morning. And first up, JP Morgan raising Abercrombie & Fitch to overweight. The analyst cites continued broad-based demand for the company's namesake apparel brand. He also notes that Abercrombie's Hollister brand's inflection is only in the middle innings and brand momentum is building internationally. Next up, Jefferies upgrading 10x Genomics to a buy. The firm cites conviction in single-cell recovery for that upgrade. Jefferies also sees continued utility in areas such as oncology research and says that 10x has superior technology versus its competitors. And finally, Goldman Sachs downgrading Lennar to neutral. The firm sees less upside in Lennar shares versus others in the home builder group when considering that the operating environment, what it is over the coming quarters. Now coming up, mega donor George Soros backs VP Kamala Harris. That and more in our Wall Street Beat. This is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
This is Bloomberg Open Interest. Let's get a check on this stock market. About 20 minutes into the U.S. trading day, you can see equities broadly higher. The S&P 500 up about 0.9%. The NASDAQ 100, 1.5%, a real rally on our hands. The Russell 2000, the small caps, joining in on some of the fun, up about 0.3%, Janali.
And Katie, now it's time for the Wall Street Beat, the most talked about stories in finance. And our top story today is Vice President Kamala Harris. She has the backing of billionaires such as George Soros, but some donors are calling for an open nomination process. You take a look at the story on the Bloomberg terminal, and for example, Mike Novogratz, billionaire who had called for President Biden here to step down, is saying that this should be a mini bake-off, that it would get a ton of press. And you have to wonder if that's kind of the reason they're holding
No, I think that's a great idea. And a lot of of people are worried that it would imperil maybe her chances. I don't think so. She seems to have more than 80% of Democrats backing. It would be an event that draws attention. Look how much we paid attention to the RNC, right? And a drumbeat up to her eventual nomination. So I think it would only do good for the party.
Yeah, earned media, if you will. I mean, everyone or a lot of people organically paying attention. It is interesting, though, to see some of the pushback in the hours after, of course, Biden endorsed Kamala, that this is basically an anointment, a coronation. And it makes sense that some of the donors would maybe want actually to see some sort of contest.
Within 90 minutes, $75,000 raised from 700 donors. Now the small tickets as well as the big tickets are something to watch because it signals support. Far out idea here. Remember, there are a lot of Republican-leaning billionaires that have been on the sidelines. You have to wonder if now their distaste for Trump shows up in the Kamala ticket.
Yeah, and it'll be interesting to see who she chooses, obviously, as vice president, because if she chooses someone who's seen as less progressive, and let's face it, she has to be seen as very progressive from California, maybe that would help her get some centrist votes.
This is one of the rare instances where I feel like the vice presidential pick really matters. I mean, if you look at political science, history, et cetera, the VP pick really doesn't truly matter that much in the grand scheme of things. Here, in this unprecedented situation, maybe it's a little bit different.
Yeah, although it can hurt you, right? If you choose Sarah Palin, watch out, you might lose that election. Let's get to the trading diary right now, what you need to be watching today and this week. Kamala Harris is set to speak at 11:30 a.m. from the White House. We'll bring you that live, and you can watch it on the Bloomberg terminal as well. Just type TLIV. Tomorrow we get big tech earnings. You heard Dan Chung talking about the Tesla Cybertruck. There it is. We're going to get earnings from Tesla as well as Alphabet, the company that runs Google. On Wednesday, Israeli Prime Minister Benjamin Netanyahu will address Congress and meet with now lame duck President Joe Biden. On Thursday, we get U.S. GDP and durable goods. Will the economy start to take over in this market? We get PCE on Friday, so another read on inflation that you don't want to miss. Coming up in the next hour, Threadneedle Ventures founder Ann Berry joins us. She thinks markets are in for a roller coaster ride this election season. This is Bloomberg.
Liquidity is the lifeblood of an airline. We make very conservative decision-making about when we raise funding and how we raise funding. We try to diversify our sources, and we're always very focused on the actual rates. And we like to build in flexibility in these financing structures so that we have an opportunity to prepay debt when appropriate, so that we can continue to optimize the overarching rates that we're paying.
What have you learned with the dynamic move of the interest rates that we've seen from Chairman Powell? I mean, do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well because things change by the day. I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. They may not be a buyer at this point, but I do want to spend a lot of time in front of that other set that is a buyer at this point. They're interested. They want to be an early adopter of the stock. They're interested in the story.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube as well, so you can head over to youtube.com and search Bloomberg Podcast, and that's where you'll find Alex Steele and me. We are here in New York City. Coming up, politics right back on the front burner for these markets. Dwayne Wright, Bloomberg Intelligence health policy analyst. What does it mean with Biden stepping down in the campaign? Maybe Vice President Harris, is her healthcare policies in line with those of Biden? We'll check in on that. Wendy Schiller, she covers all politics for Brown University. She's going to weigh in on her thoughts on these markets. Now, Michael McKee, is he back?
He's back.
He's back.
So this was amazing because he was
stuck in the airport like days.
72 hours it took him to get back from Rocky Mountain Summit. And we were emailing the whole time. He was also tweeting about it, but we were emailing the whole time with all the updates.
Okay, so he's going to check in with us just to prove that he's still here.
And also,
that he's here. Okay,
this is
very
an
good. That's
insane
all
story.
coming up in this half hour. We got a lot going on. Let's check in with John Tucker and kick this whole thing off.
All right, and this report being brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest at ibkr.com/RIA. Well, it looks like tech stocks are rebounding from their worst week since April. Tech-heavy NASDAQ right now, NASDAQ 100 up 1.2%. As you look at the S&P 500 right now, best performing groups, information technology, communication services, and the best performing individual stocks in the S&P 500. Lam Research up 4.5%, Tesla's up 4.5%, KLA Corporation up 4.5% right now. Lori Calvasina at RBC Capital Markets says, you know, with the election-related news we've been following, the markets really don't like uncertainty.
You know, even though this is unprecedented, we go back to the historical playbook, which is that you usually do have a few sell-offs during presidential election years, mild pullbacks. Stocks usually rally after you get resolution, and I think those are good lessons to keep in mind as we navigate all the noise that we're encountering day to day.
And just real quick, some of the other stocks on the move. Verizon reporting operating revenue that missed estimates. Those shares were down 6.2%. Truist Financial falling after its second quarter earnings report, seen as quote-unquote noisy. And Delta standing out as the airline worst affected by that technology meltdown on Friday. Even this morning, they had to cancel 600 flights, so that's still ongoing. And for what it's worth, since 1928, the S&P 500 has advanced roughly 5% on average in the third quarter of election years. S&P 500 right now 32 points higher. That is up 0.6% at 55.38. The Dow down 28 points, 40,256. And the NASDAQ 100 up 233 points. And that is a rise of 1.2%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Alex.
Oh, so lovely to have John Tucker back. Here's what I want to know. How many vouchers, drink vouchers, do you think Delta had to hand out?
Oh, that's a great point.
I mean, that's got to hurt. Anyway, so I think that story is totally fascinating. Then you pair it with Ryanair, warning of lower fares. I don't know. this is something to talk about with the airline industry. We also want to get some take here on other stocks as well. Carmen Reinecke of Bloomberg News is joining us. You were looking at Verizon. They had earnings this morning.
So Verizon shares down about 6.3% today. This is actually only the worst intraday drop in a week ticker VZ. Shares are down. The company reported operating revenue that missed estimates, and that basically was because fewer people upgraded their wireless equipment in the quarter. The weakness also overshadowed gains in wireless phone customers and an increase in fixed wireless broadband internet customers. So these are really the areas I think that Verizon's trying to focus on going forward. And unfortunately, just this lack of upgrades was really weighing on their results here.
I'm going to move this market come September because I'm upgrading the iPhone.
Yeah, you are.
And I'm a Verizon customer, so you know they're going to try to upsell me on
Totally.
silliness.
And that will make all the difference to Verizon.
That's going to move
just
forward.
falls
Just
that one.
Let me leave it out
the
there.
wave.
So what else are you looking at?
Yeah, so also looking at shares of Tellurian. So this one is interesting. This is a natural gas.
Sorry.
Natural gas export company. It's up 66% right now on news that Woodside Energy Group, which is an Australian company, agreed to buy it for about $900 million or $1 a share. That's still trading at a little bit more than where the stock is right now. It's currently at about 95 cents per share. Really beaten down this year. It's not done super well, but just interesting, whenever you see double-digit jump like that, you kind of have to point it out.
So here's why this is really cool. Okay, let's go. Sit back for a second here, folks. So Sharif Suki was the CEO of Cheniere. He started that company, and he started it to import natural gas. Then he saw the wave happening of, we have natural gas here, let's do exports. So he was the first person who had the foresight to shift financing and create export-driven LNG market here in the U.S. Then he got the boot out of Cheniere, and he started Tellurian. And Tellurian was going to be something of a novelty. It was going to have natural gas fields, it was going to have a pipeline, and it was going to have an export facility. But that became really hard to fundraise for. And it was really difficult for them to do it with this natural gas environment, particularly when some of the competitors, aka Venture Global, can do it for under $2 MMBTU. And then Sharif Suki left Tellurian. He was also some stuff about shares where he borrowed money in shares and he had to give up a house in Colorado. It's a whole thing. But the point is that Sharif Suki is a big deal in the energy world, and it's a big deal that the company that he founded is now bought by another company. Okay, Alex explaining is done.
Okay, very good.
I love it. No, that was great. The last one that I'm looking at today is CrowdStrike. I mean, we all know why this is down. It's down 13% right now. Really just can't catch a break. Over the weekend, a few analysts downgraded the stock. So analysts at Guggenheim downgraded to neutral from buy. Scotiabank also cut sort of similarly sector perform from outperform. Basically, they're just saying that there's going to be resistance to new deals here. I mean, CrowdStrike was really seen as, the best in class in cybersecurity, but, this is an issue. This is sort of a black mark on their really solid record going forward. The company also will be reporting earnings. They're expected at the end of August. So analysts also saying that this, adds some uncertainty heading into that earnings report.
All right, Carmen, thank you very much. Carmen Reinecke joining us from Bloomberg News. Yeah, you missed a day on Friday, Paul.
Yeah, I understand. I woke up and by the time I woke up on that Friday, it was all fixed.
It was all done, except for
done.
Delta.
Yeah,
they still had problems, as Mike McKee will attest to later on in the hour. So, and clearly the big news of the last 24 hours was President Biden dropping out of the race. I have so many questions on so many different angles, but it's clear that the market is pretty sanguine when it comes to this switch up.
Yeah, very, very much so. I mean, I think the market, probably like everybody else, is trying to figure out, okay, now what happens?
Yeah, now what?
Now we'll worry about it, in a couple of days when I figure out what's going on here.
Well, for that point, though, it feels like it's good to check in on individual sectors just to see what the impact may be if Kamala Harris goes from VP to president in that next election. So Dwayne Wright is Bloomberg Intelligence health policy analyst, and he joins us now. Dwayne, how much daylight do you know is there between Joe Biden and Kamala Harris on healthcare?
Thanks for having me. So I'd say very little. When you think about where this campaign's probably going to go, I'd say two areas are worth focusing on. One, it's looking at the accomplishments of the past 4 years, and that's the affordable Affordable Care Act, the enhanced subsidies that help lower income individuals by an Affordable Care Act plan, 21 million people are now enrolled. That is expected to increase over the next year. Those enhanced subsidies will expire, so we expect, like President Biden would have, Vice President Harris, if she becomes president, to make sure those subsidies remain intact. Now, federal estimates suggest if they go away, we could see about 4 million people lose coverage. So we expect that to be a big part of her messaging over the next couple of months. And I also suspect the Inflation Reduction Act, specifically the drug pricing provisions that allow the government to negotiate lower prices for what could be 40 drugs over the next 4 years. We expect the administration, or a Harris administration, to continue the path of implementing the program and touting a lot of the other provisions that cap out-of-pocket spending for Medicare beneficiaries.
All right, conversely, what do we know, if anything, about what a second term from President Donald Trump would mean for broad healthcare environment?
Yeah, it's a great question. It's interesting on the Affordable Care Act. President Trump came within one vote of repealing it. At the time, there were about 14 million people in an ACA plan. In the past 12 months, he has said he would like to repeal the ACA. And then he's more recently said he doesn't want to repeal it. He wants to make it better. But he hasn't detailed what better is, and better for the taxpayers, better for individuals. And so it's unclear where he'd be on the ACA. We do think that the enhanced subsidies that I mentioned, which expire at the end of 2025, in a Trump White House and potentially a Republican Congress, we think those go away, kind of chipping away at the Affordable Care Act. I'd say the drug pricing pieces are a big question. 2016 candidate Trump supported federal negotiation of drug prices. President Trump then opposed it. He hasn't come out and said that he wants to repeal the IRA. So we could see a Trump say basically, look, if I come in as president, I can negotiate lower prices than Joe Biden can. And he may very well do that. I think people forget Donald Trump is not a fan of the pharmaceutical industry. He has had his own proposals to tie drug prices to those in other countries. We could see him revisit that proposal on top of what is already in law with the IRA. So I think on the health insurance side, we could see some chipping away, which would hurt some companies like Centene, United Health. On the drug side, he will not be a fan, but maybe we wouldn't see him go as far as Joe Biden would.
And what about the insurers that are tied to Medicare and Medicaid? I guess Medicaid in particular, because weren't a lot of people added onto that program during COVID, and now that will roll off, so there will be sort of a change in coverage?
Yes, that's true. So we did see during some of the pandemic relief packages that passed when Biden became president, states could not kick anybody off of Medicaid. That process restarted in 2023. And some of those health companies had projected at the time that they were going to lose enrollment, and they have. They also were in a position to take some of that enrollment and put some of those individuals into some of their other plans, like marketplace plan, an employer-sponsored plan, and we think that'll continue over the next couple of months. I'd say when we think about the future, one other thing to keep in mind: the Trump administration, Republicans want to block grant the Medicaid program or tie some work requirements to the Medicaid program. We've seen efforts to do the work requirement piece of this, and it usually leads to a drop in enrollment, which is less revenue for the insurers. So that's going to be a focus for many of the Republicans if it's Republican controlled. On the Medicare Advantage side, there are thoughts that maybe we could pursue automatic enrollment into Medicare Advantage, which is private enrollment of Medicare or private program for what is a traditional fee-for-service Medicare program. That could be on the table and might be beneficial for a lot of these Medicare Advantage plans like CVS Health, as I mentioned, United Health and Humana. So I think there are some ideas of where they'd like to go on healthcare. Can they get the votes to do it, and is there money to do it?
Is there anything, Dwayne, that's kind of being debated right now within Congress that you're following here in terms of healthcare policy?
Well, the big issue is pharmacy benefit managers. When we go back to the IRA, it was all about drugs and drug prices. The pharmacy benefit managers, because of the way the bill was passed in Congress, it couldn't really go after PBMs and change the way they operate, passing through all of the rebates to clients, whether it's employers or the individuals, reducing fees, et cetera. There's bipartisan support right now for legislation in Congress to address how these PBMs operate. And we're talking about the Cignas and the CVS Healths and, again, United Health. But as much as there are a lot of policies and ways to go about it, it doesn't seem like Congress has settled on which policies they can pass. We expect that there will be some discussion of a lame duck package after the election before the new Congress, of inserting some policies for PBMs that might change depending on the election outcome. But there is some support for doing something on the PBM side to help further reduce drug prices.
All right, Dwayne, thanks so much for joining us there. Dwayne Wright, healthcare policy analyst, Bloomberg Intelligence. Yes, we have somebody that just focuses on healthcare policy. Why? Because it impacts so many different companies and so many different industries, and the good folks at Bloomberg Intelligence got that covered for us.
Also, like, we all use it.
Yeah.
So we all need the healthcare.
Exactly.
So we all buy the drugs. So we need all that stuff. But it is interesting if you go through kind of sector by sector. Honestly, like, I don't think anybody knows. I mean, one area that I have been reading that potentially President Harris would be more aggressive on would be energy. She obviously is from California, notoriously sort of not loving the fossil fuels, has talked about not wanting fracking or offshore drilling. So maybe that's one area that you may see. But it's so hard to game these things because it also depends on who's in the House and who controls the Senate. And sort of gaming the market, it feels like the market isn't gaming it. It feels like they're just sort of reversing some of last week's, losses in tech. Yeah, exactly. So, I mean, again, you look at just the action here today. The NASDAQ's up 1.3%, and that Russell 2000 negative 0.2%. So what we'd seen over the last 10 days was kind of the reversal of that. We had the small cap stocks really rallying and outperforming the broader markets, kind of that rotation trade, if you will, a little bit, but that's kind of losing a little steam here. Although only down 0.2. Like if you actually, like a big tech ended down, I think the week last week, like 5% or something along those lines. So the Mag 7 ended the week with a 5% slide. So if we reverse those losses, the Russell should be down a lot more, but only down by about 0.2%. But now it becomes, will earnings be delivered for the small caps? Like, will they actually show some kind of growth? And then there's still concerns. I read a lot of notes over the weekend about that floating rate debt. And some are going to say, no, they termed it out. You don't have maturity wall. And others will say, no, a third or maybe less has floating rate debt for the companies that are small cap companies. And that's going to be a problem. So it feels a little binary from that perspective.
And I think as you go into this, as you get into the tech earnings here, it's that same old argument that we've heard from Mandeep Singh of Bloomberg Intelligence, which is, boy, the bar is really high in terms of expectations, and not only in terms of the earnings, but the guidance. But for the last 5 or 6 quarters, those tech companies have met or exceeded that bar. So you're just waiting for the time when they don't. And if you get 1 or 2 misses, what does that mean for the broader market? So certainly keep an eye on earnings. Tesla and Google. Tesla and Google after the close tomorrow. How about that? This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The mega cap space that is rallying today after the sell-off with the NASDAQ 100. Right now, it is up 1.2%, up 226 points. You have Tesla and NVIDIA adding at least 3.5%. Tesla and Alphabet, as Paul mentioned, they're going to report earnings tomorrow. CrowdStrike Holdings, quick look there. Those problems from Friday, they actually continued for Delta, as we were talking about a little earlier. But those shares, CrowdStrike, down 12% in this morning's trading. And after last week's surge, Russell 2000 of smaller caps, that's lower right now. It is down about 0.2%. And Morgan Stanley's Mike Wilson weighing in there saying small caps face technical resistance and they also lack fundamental drivers. Investors are also going to be focused this week on the economic readings, especially the Fed's preferred inflation measure for clues on whether they're going to be able to cut rates come their September meeting. Right now, the S&P 500 37 points higher. That is up 0.7% at 55.42 on the index. The Dow Jones Industrial Average is up 35 points. The NASDAQ 100 again up 224 points, a rise of 1.2%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Alex.
All right, John Tucker, thank you very much. Alex Steele, Paul Sweeney, John Tucker. This is Bloomberg Intelligence Radio. We bring you all the top news in business and finance and economics. We are live from Interactive Broker Studio right here in Midtown in Manhattan. Let's continue the conversation of what President Biden dropping out of the presidential race for 2024 means. Wendy Schiller, professor at Brown University and interim director of the Watson Institute, is standing by. She joins us from Providence, Rhode Island. Professor, I have so many questions, but one basic one is, will whoever becomes the next presidential nominee and VP make it on all the ballots in all the states? Is that a foregone conclusion?
No, Alex, it's a great question. And good morning to you too, Paul. Because Republicans are already gearing up to try to block access to these ballots in particular states. Now, some of the largest states we have may lean blue, like California, New York, Illinois, and their Democratic legislatures will take care of this. But the Supreme Court, a long time ago, the year 2000, ruled that parties essentially have control over their own nominating processes. That even though states control ballot access, parties can really do whatever they need to do to change primaries or nominate people. So I think it's going to be a tough call if it actually got all the way up to the Supreme Court in expedited review for them to go back on that and all of a sudden say that state legislatures can actually determine what political parties do. So this is going to be the legal wrangling. The Republicans have to decide whether it's worth it to spend the money on this, given that the likelihood of prevailing in enough states to make a difference right now doesn't look all that great.
All right, Wendy, we are all in uncharted territory here in terms of this process, the campaign here for the Democrats. Can you lay out how it might play out, i.e., when will the Democratic Party decide whether they are fully behind Vice President Harris or they may open it up to a wider competition? How does that work, do you think?
Well, a long time ago, or even 20 years ago, there was a hierarchy that ran the Democratic Party, but just doesn't exist anymore, mostly due to the fact that the donor class is now independent of party leaders. People can give as much money independent of a party. So it really has weakened centralizing forces in the party. You can have a Trump campaign and Trump himself centralizes the party, but otherwise systematically very difficult to do. I think you've got some lone voices, particularly President Obama, former President Obama's loud, voice, sort of saying, wait a minute. But a lot of the people who are in elected office right now around the states are now gearing towards Harris, and delegates themselves who are already pledged to Biden are saying at the convention they'll vote for Harris. So I think there'll be somewhat of an organic kind of organization of a party at the state level, and the more elected leaders, especially those running for House and Senate, saying they're behind Harris really pushes the party at the convention towards Harris. But they want to stay open to voices and engage people who have felt disengaged by Biden's refusal to step aside.
Yeah, that's definitely a tightrope to be walked, to be sure. Now, before we get to the DNC, there's apparently this virtual roll call vote between August 1st and August 7th. What is that? And if there isn't a consensus behind Harris at that point, what happens?
Well, Alex, this was really pushed by Ohio, the state of Ohio, that said, you're not going to meet our deadline. We're not putting Biden on the ballot for president. So they tried to fix it. Mike DeWine, Republican governors, tried to fix it. But nonetheless, they're up against a very tight deadline that states set for determining the ballot. So I think that is the problem. And I think this is going to be where Harris and whoever she appoints to run her campaign has to really literally get on the phone with state party chairs who typically know most of the delegates. And the DNC has the list of all those names. And you've got to get surrogates and yourself to be on the phone literally or virtually and talking to people saying, vote for me on the first ballot. It's possible she doesn't win the nomination on the first ballot, but if it looks quite likely and she's almost there, you can see that happening on the second ballot. So it's unclear who steps forward to be an alternative. Who's really going to launch a challenge against her? And let's not forget, core constituency for the Democratic Party, black voters, particularly in swing states, and suburban female voters. And who else fits the bill other than Kamala Harris? And that's what the people who don't want to launch support for her now have to say to themselves if they want to really be viable going against Donald Trump and J.D. Vance.
Are you surprised that we've not heard an endorsement from President Obama?
The generous interpretation I like to say is that, he'd like to make sure that disaffected voices, we saw almost, 100,000 uncommitted or something in Michigan for Biden in the primary, that those voices feel that they're being heard in the platform and who the VP pick might be. I think what he's trying to do is make sure that people feel engaged. And if it just looks like the elites in Washington picked Kamala Harris, which is not what's happening right now. The elites in Washington are not doing that. Yeah. It's the grassroots and state level that are doing that. But if that's what it looks like, he's worried, I think, that people won't feel as consulted as he needs them to be if he's a Democrat and he wants to make sure he is a Democrat, wants to make sure to elect Kamala Harris. But it increasingly looks right now that he is out of step with where the party is moving quite quickly publicly to support and rally around Harris.
But that would make sense of why not only Obama but Pelosi is also not is setting mum on all of this. Before we let you go, we know you got a heart out in just about a minute. What kind of lawsuits do you think we're going to see to prevent whatever ticket we do have for the Democrats' lack of access to the campaign funds? What do you think is going to play out there?
I think Republicans will launch every and any lawsuit that they can to gum up the system, make Democrats spend money to defend what they're doing, even transferring the money. It was a Biden-Harris ticket. There shouldn't be any issue there. They're going to do a lot of that because mechanically on the ground, the Democrats are much better organized with their infrastructure than the Republicans that have relied on the Trump sort of charisma to get people out the door. So whatever they can do to gum it up, they will. And that could hurt some of the states. But in terms of re-engaging the party, it seems as if the Democrats see an opportunity to get back on the road, be viable, and generate the kind of enthusiasm that they've been unable to generate for the last 6 months.
Wendy, thank you so much. We very much appreciate you. Wendy Schiller, professor at Brown University and interim director of the Watson Institute. So I promised you we were going to have this segment. So we know the Delta outage happened on Friday. Now, what you guys don't know is that Mike McKee is one of my best friends, and he was like emailing me live updates 17,000 times a day all weekend to chronicle his travels from the Rocky Mountain Summit where he was all the way back to New York. It took you, 72 hours, Mike?
Something like that.
I'm not being sarcastic or overdoing it. And I just thought it was worth talking about some of the travel times because you were telling me things like even like the business customer service line was like 2.5 hours long.
Oh, I was on the phone. Well, this was Saturday. I was on the phone.
Friday morning. Start Friday morning.
Friday morning, I got to the Jackson Hole Airport at 7:30 in the morning and left that evening on a 9:30 flight. Which wasn't my original flight, but it was one I was put on to Salt Lake City, where I was promised a connecting flight the next day, which got canceled. And so I was at the Jackson Hole Airport for 14 hours, and then went to the airport in Salt Lake City, was there for 2 hours, the flight was canceled, and spent 3 hours trying to talk to anybody at Delta about what I could do. The lines were very long, and the phone lines weren't answering, and they had a thing in the Sky Club where you could talk to people, but you had to sign up and get on a waiting list to have your turn, and I was number 93 when I signed up, and it was a 2 hour and 40-minute wait. So finally got a flight yesterday and got back about 4 o'clock yesterday afternoon.
So that thing was real. So I was lying
real.
on the beach, totally oblivious to all this. It was real for a lot of people.
It was real for a lot of people, and that's what struck me is how many people in every airport that I was in, how many people there were who were still stuck in these long lines. I had the advantage of the corporate travel agency that tried to help, couldn't do much. But the thing that impressed me, though, and I have to say this, is the customer service agents that you did get to talk to, especially the ones on the front line at the airports, the gate agents. They were just marvelous. I mean, they didn't know anything. They couldn't do anything, but they treated each person with courtesy and respect and sympathy, knowing that, you know, they weren't going to really be able to help them. And they were so nice to everybody.
How many vouchers do you think were handed out to everybody?
Well, they gave us a lot of food vouchers.
It was like, here you go, guys.
Yeah,
I mean, was there enough food and drink in the airport?
Well, they don't take. You can't use the vouchers for alcoholic beverages. I found out. But
yes, found out the hard way.
But you can get food.
That is an amazing story. I loved
and
all
you're
the
getting ready to
tweeting.
fly back out there next month.
Next month.
Okay, we're getting you to the surveillance stream.
Next Tuesday, I go to Washington, D.C. That'll be my first.
The train, the Acela train.
Yeah.
Back
Well,
into
I mean,
the pond.
But maybe not the train.
Just so everyone knows, my husband was flying back from Virginia today. That got canceled, so he's on like a 12-hour train on Amtrak. So it's still surfacing. All right, Mike, thanks a lot. Let's get you caught up on world and national news. For that, we go to Michael Barr.
Thank you very much, Alex, Paul, John. Kentucky Governor Andy Beshear says he fully endorses Vice President Harris to be the Democratic nominee for president. Beshear has been mentioned as a possible running mate for Harris. Beshear told MSNBC, his words now, if someone calls you, you at least have to listen.
Well, let me first say I love my job. I love serving the people of Kentucky. The only way I would consider something other than this current job is if I believed I could further help my people and to help this country.
Governor Beshear went on to say Harris is smart and strong, which will make her a good president. But she's also kind and has empathy, which can make her a great president. Meanwhile, some Republicans on Capitol Hill are demanding that President Biden go a step further and step down immediately. They say if Joe Biden is not fit to run for president, he's not fit to serve as president. The U.S. Secret Service Director, Kimberly Cheadle, will testify before a congressional committee today about the recent failed assassination attempt against former President Trump. Chairman James Comer says Americans want to know how the gunman made it to the top of a roof at a Pennsylvania rally. Cheadle says her agency is reviewing its actions. Israeli Prime Minister Benjamin Netanyahu will be in Washington today. He leaves behind a brutal war to make a speech before a joint session of Congress. Netanyahu spoke while boarding his plane.
I will address for the fourth time both houses of Congress as the Prime Minister of Israel. I will seek to anchor the bipartisan support that is so important for Israel.
Netanyahu says it's important that Israel's enemies know that America and Israel stand together today, tomorrow, and always. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. It's technology stocks see the lead after that recent sell-off. Information technology, communication services, the best performing of the major industry groups right now. And the most active so far, shares of NVIDIA up 4%. That's followed by Tesla, those shares up 3%. In the meantime, with so much of the focus on politics, Jim Bianco at Bianco Research isn't so sure it matters a great deal for the financial markets.
Whoever wins, we're still going to have a deficit. We're still going to have high government spending. We're still going to have the same problems that we've had now. We're going to have, which, regardless of which candidate that we get winning in November. And that's why I think that we've kind of overstated this Trump trade.
The parade of earnings rolling on. Verizon Communications reporting operating revenue missed analyst estimates. Fewer people, it turns out, upgrading their wireless equipment. Shares of Verizon right now down 6.4%. Overall, the S&P 500 55 points higher. That's 1% higher. 5560 on the index. The Dow Jones Industrial Average is up 156 points, and the tech-heavy NASDAQ 100 302 points higher. That is up 1.6%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, John Tucker. I'm Alex Steele, alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio. We bring you all the top news in business and finance and economics through our lens of Bloomberg Intelligence, folks. They cover 2,000 companies and 130 industries all around the world. And we also tap our resources outside of Bloomberg Intelligence. And for that, we go to Christopher Smart. He's managing partner at Ubroth Group and former special assistant to the president for international economics. He joins us from Boston, Massachusetts. Christopher, it's great to get your perspective. So we looked at last week as the Trump trade, or at least some people did, right? Steeper curve, bid into crypto, tech was selling off, you had a move into small caps. Is that trade now set to reverse with the change on the ticket from the Democratic Party?
I would say it looks like it might be getting a little bit of pushback this morning and maybe over the next couple of days, but I would side with that clip you just played from Jim Bianco, that the Trump trade, as it has been pushed out or talked about over the last week or so, has probably been overblown. A lot of the moves you've seen in the market, whether it's the yield curve steepening, the move in the dollar, the move in the equity markets, I think even without any of this background noise from the political world, it's not really background noise, it's very important noise, but had we not had any of that, the fundamentals of interest rates being cut, maybe some disappointing earnings, maybe a little hiccup over at CrowdStrike, that does a lot more to explain the recent dynamics that we've seen in the markets. And maybe other than the Bitcoin price, there really are very few pure plays on the election outcome right now.
Hey, Chris, before we get to President Biden stepping back here, what did you take away from the Republican convention last week?
Well, my takeaway is this is not the Republican Party that I grew up with, or that maybe most of us have come to know over the last 20, 30, 40 years since President Reagan. This is a party that has very much shifted its focus towards tariffs over free trade, towards workers over big corporations, and towards pulling back, frankly. A lot of our international commitments abroad are now under question, whether it's in Europe, whether it's defending Taiwan. The Republican Party wants to put more money into defense, but it's not clear really when and how it intends to use that in some of these key hotspots around the world. So I think it's a big shift in the debate, and no matter who wins the election in the fall, that debate is shifted to new sets of questions that the candidates will be arguing.
Which kind of brings us to the broader economic landscape. Like, this is a very different economy than we saw back in 2016 when President Trump was elected the first time, right? I mean, we're sort of at the end cycle of the economic cycle. You have Fed funds rates are high. Yes, they'll be cut, but they're still relatively high. The deficit is so much larger, and the massive amount of stimulus that we've had. What does this wind up meaning on an economic front to whomever is in the White House?
Well, and it's interesting that the Republican Party, and indeed, to some extent the Democratic Party, are bringing the same proposals to the table that they brought us 4 years ago. So I think that, or 8 years ago. So I think that says something about where our political leaders are taking us. But having said that, I think the real issue is, as you point out, that there isn't a lot of room for maneuver whoever wins this election. President Trump, at least in one interview last week with Business Week, started walking back or talking a little bit about how big tax cuts might be more difficult this time around. And I think regardless of who wins the White House, the deficit next year is more or less going to be the same. There's not a lot of appetite to cut either spending or to raise taxes significantly. So I think that's again why the market right now is not reacting too much to the potential election outcome as much as it's reacting to the current macro news, the prospect of inflation coming down, rate cuts next year, and earnings that have been weaker this time around, but certainly not anything that would signal that we're headed into a big recession.
So, Christopher, you mentioned the debt deficits and the national debt. Those have been issues that have been with us for decades. When does the market care? When do politicians care?
You've stumped me there.
He does that guy.
I wish I had a great answer for you. I mean, politicians will care when markets care. When the interest rate starts really biting and hurting and crowding out a lot of other spending priorities, then politicians will care. Markets, it's really not clear because the U.S., for all of its drama, for all of its debt, for all of its deficits, laxness or weakness in approaching the deficit, for all of that, it remains the largest, most creative, most innovative economy in the world and the most likely to grow in any given year, cycles notwithstanding. So, this is still your best bet for putting money to work. And certainly these days, when a riskless bet gets you 4.5%, why would you go prowling out into unknown and riskier shores?
When we take a look at, and I appreciate that you're saying that the markets doesn't really mean anything when it comes to the candidates right now, but where are the areas that have the biggest binary reactions? Like I'm thinking of crypto, I'm thinking of energy when it comes to Harris-Trump debate.
No, I think within the stock market, there are clearly some plays that are reflective of some of this. So as you say, defense, crypto, energy, to some extent bank stocks, but the way Republicans were talking about Wall Street bankers last week, I'm not sure that that's a clean play from my perspective. So I think there are, and then on the flip side, maybe clean energy stocks, clean energy companies get fewer subsidies, less attention from the government, and so that's where you would sort of see things playing out one way or the other. But again, I think at the macro level, I'll go back to what I said before: the fundamentals of interest rates and inflation are what's driving things.
All right, Christopher, thank you so much. We really appreciate it. Christopher Smart, he's a managing partner at Arbroath Group and a former special assistant to the president for international economics, joining us from this little town up there. They have a baseball team. I think it's the Red Sox up there in Boston, so we appreciate that.
That's where they throw and they catch and they hit the ball.
They throw and they catch and they hit.
That
that's
makes
what
sense,
they do. So, anyway, it'll be interesting to see kind of, I think at 11:30 this morning, Wall Street time, we're going to dip into some remarks by Vice President Harris. She's delivering these remarks at an event celebrating the National Collegiate Athletic Association championship teams for 2023-24 season. So that'll be interesting to see what she says here this morning. Does she save some of her political comments for a separate discussion? We'll have to see.
I mean, it feels like, what do I know? But it feels like the first time she's speaking after this monumental change. She's got to say something. But, again, what do I know?
So we will dip into that live.
Yes, we want to make sure that we're definitely on that. But, I really do feel like if you take a look at the market, the consensus, where we're talking to experts, Jim Bianco was saying it, Chris Smart was saying it. Also, it's had it written like Mike Wilson at Morgan Stanley says, look, the economic cycle and where we're at is going to matter a lot more to the equity market right now than anything that happens out of D.C. And as we know, hedging those bets maybe don't work. Like if you bet on energy stocks into President Trump, guess what? They outperformed under President Biden. So it doesn't necessarily equal any kind of solid returns.
Yeah, but you gotta try your best, place your bets down there. But we'll see how this plays out. S&P, that's up at 1% today. NASDAQ up 1.4%. This is good.
your company news headlines on Bloomberg Radio.
And I'm John Tucker with a look at some of the company stories we're following. Let's start with McDonald's. The restaurants for McDonald's are going to extend the burger chain's $5 meal deal. About 93% of McDonald's locations have committed to selling the bundle past the initial 4-week window. Early performance indicates the meal deal is meeting the objective of getting people to back in McDonald's. A burger chain looking to lure in customers who've limited their spending as disposable income shrink. A lot of the cutback followed the chain price increases over the past few years. So the $5 deal includes McDouble. I don't even know what this is. A McDouble or McChicken sandwich, small fries, 4-piece chicken nuggets, and a small soft drink. Michael Barr's over here drooling. After spending more than $20 billion to produce original TV shows and movies that not a lot of people watch, Apple starting to refine its strategy in Hollywood based on interviews with more than a dozen people. Apple services boss Eddie Q's been having regular meetings with the studio chiefs to go over budgets. He's pushing them to exert more control over spending. They've told some of their top creative partners that they want to change their reputation as the biggest spender in town. And let's conclude with Disney. Walt Disney World trying to make amends with unhappy guests. Disney price hikes, crowds, and customer service missteps have caused a lot of people to sour on the parks. Now the company's trying to earn them back. So I had to do a double take on this. The Bloomberg story says the cost of a high-end trip to the Florida parks has now reached, for a family of 4, around $40,000.
What?
Is that even possible?
Where are they staying?
Who knows?
This is your research.
They're eating well and staying at some nice places. That's your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Monday, everybody. I'm Alex Steele alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio. We are broadcasting to you live from Interactive Broker Studio right here in Midtown Manhattan. We also keep you up to date on all the world and national news. And for that, we go to Michael Barr. Michael?
Thank you very much, Alex, Paul, John. Donors already giving record amounts to Vice President Kamala Harris as she launches her bid for the Democratic presidential nomination. Right after President Joe Biden announced he is out of the 2024 race, Harris raised more than $49 million from the small dollar donors. Meanwhile, Kentucky Governor Andy Beshear says he fully endorses Harris to be the Democratic nominee for president. Beshear has been mentioned as a possible running mate for Harris. He says while he loves his job as governor of Kentucky, if someone calls you, you at least have to listen.
The vice president is smart and strong, which will make her a good president. But she's also kind and has empathy, which can make her a great president.
Beshear spoke on MSNBC. And Joe Manchin says he won't compete with Harris for the Democratic presidential nomination. The West Virginia senator left the Democratic Party this year, but had considered re-registering to vie for the nomination against Harris. But Manchin told CBS News today he would not be a candidate. The Trump campaign faces a new challenge with whoever is the new opponent. But Brown University political scientist Wendy Schiller says she doesn't expect much change in the Republican strategy.
It was effective in the debate to go after Biden on inflation and the border. That's exactly what they'll pin on Kamala Harris. You know, the advantage of a VP is that people think it's sort of a normal order of things, and that she's already sort of known with some disapproval versus approval imbalance problem that she'll have to correct. But nonetheless, she will be responsible for answering for the Biden administration. And that's what the Republicans, if they stand message, should really do. It's been very effective.
Wendy Schiller of Brown University was a guest on Bloomberg Daybreak. The head of the U.S. Secret Service is testifying right now before a congressional committee. Kimberly Cheadle is being grilled over a recent assassination attempt against the former president, Donald Trump, at a Pennsylvania rally. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Michael Barr. This is Bloomberg. Paul, Alex, John.
All right, Michael Barr, thank you very much. So this was an article, it is an article in the FT that kind of detailed Warner Brothers Discovery and its have to match proposals for purchasing the next round of broadcast rights to the U.S. National Basketball Association. Now, apparently this is a big deal. Apparently this is going to be sort of a proxy of something, but I needed Paul. To help me understand what this means. Warner Brothers Discovery stock is down by about 4%.
Well, I'm going to quote Rich Greenfield at Lightshed Partners. I just read his research note this morning, and he's one of the leading voices in media research, in my opinion, on the street. And he basically just lays it out here. If you're Warner Brothers Discovery, on the one hand, you've had the NBA on TNT and TBS, whatever, for like more than 30 years.
Okay.
It's really part of your DNA, and they do it really, really well. However, they got outbid here by NBC/owner Comcast, who put up a huge number. A lot of people feel like Comcast is overpaying, but they have reasons to do that. And if you're Warner Brothers Discovery, do you match that? Or do you try to match and go against the Amazon package? Do you want to really try to get into a bidding war with Amazon? So Rich Greenfield put out a note today just saying, you know what, maybe you just let this one go. As much as you love the NBA, it's not a good financial deal for you, number one. Number two, you've got a leveraged balance sheet, and you need to be focusing on that as opposed to putting on even, taking on more liabilities like an NBA contract. So we'll have to see, but in the next short time, you will see if Warner Brothers Discovery, owner of TNT, will try to match some of these bids for the NBA that are out there, because they own the rights and they have kind of the right to come up at the end of the day and match.
Well, apparently, Warner Brothers now pays closer to $1.2 billion per year. The Amazon is near about $1.8 billion for the annual average value, and the proposal from NBC is $2.5 billion, just for perspective. Yikes, that is a big number.
So player salaries are not under threat in any way.
That's a great way to look at it.
Cool, okay, I learned a lot. Thank you very much, Paul Sweeney. Much more coming up. We're going to continue the conversation about politics, economics, as well as equities. Nathan Dean, Bloomberg Intelligence Senior Policy Analyst, will join us for his take on a Harris presidency.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Nathan Dean. This is going to be a really important discussion. Nathan Dean is Bloomberg Intelligence Senior Policy Analyst. He's going to talk to us what it means for investors, the fact that we have President Biden stepping down and maybe Vice President Harris taking the lead there for the Democrats. What does it mean for investors? And quite frankly, Nathan Dean's one of the very few people in Washington, D.C. I really want to hear from because he's smart and he kind of breaks down in terms that we can understand. Ryan Jacobson, Chief Economist at Annex Wealth Management, is also going to join us. And then at the bottom of the hour, around 11:30ish, we're going to dip into some comments being made by Vice President Kamala Harris at an event for the NCAA athletes. So we'll dip into that, see what she has to say about the news from over the weekend. So a lot happening in this hour, but let's kick it all off with our friend, Mr. John Tucker.
All right, Wall Street trying to recover from its worst week since April with big tech rebounding. Among the most active shares of NVIDIA, they're at the top, up 3.5%. Tesla, ahead of its earnings, they are up 4%. Alphabet and Tesla going to report tomorrow, each again rising at least 2% for Tesla. As I said, it's just about 4%. Verizon Communications tumbling 6%. They reported profit for the latest quarter that matched expectations, but the revenue fell short. And then more fallout from the IT debacle. CrowdStrike stock down another 11% after taking an 11% hit on Friday. Meantime, Wei Li at BlackRock advises investors, you know what, forget about the political landscape for now and keep your eyes on company performance.
Cut through the day-to-day noise and really focus on the fundamental picture. And the fundamental picture remains that the earnings growth strength remains quite strong.
Right now, the S&P 500, 51 points higher, up just about 1%. 55.57 on the index. The Dow Jones Industrial Average up 178 points. That's a rise of 0.4%. The Nasdaq 100, 252 points higher, and that is a rise of 1.3%. Russell 2000 of smaller cap stocks, that is up right now 0.4%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Alex.
All right. Thanks so much, John Tucker. Alex Steele alongside Paul Sweeney and John Tucker. Welcome to Bloomberg Intelligence Radio. Happy Monday, everybody. If you were long tech, it's a happy Monday for you. Was not last week, though. I mentioned the Mag 7 ended the week with a 5% slide, and we get a lot of Mag 7 earnings as well. Tesla and Google coming out tomorrow. All right, let's get some more details here with Abigail Doolittle, Bloomberg News Markets reporter, joining us. What are some of the companies that you're watching, Abigail?
Well, I'm watching that big tech trade because it is an interesting rebound for sure, whether it's Apple, Microsoft, Tesla, NVIDIA. NVIDIA, very importantly, because last week NVIDIA was doing something that it had not done in quite some time, and that was hitting down to an important level of support around 118. If below that level, we will likely see NVIDIA go sharply lower. And right now, it's hugging its 50-day moving average.
Oh, yeah, it is.
Yes.
Right on it. Okay.
And it's not necessarily healthy. Typically, when you see a good test, you see it hit and then kind of go back off. Whereas right now, investors, even with the stock up almost 4% today, are trying to figure out what's next. There's gaps on both sides. I would say the gaps to the downside are a little bit more powerful, and that simply reflects the idea that too far, too fast. In addition, there is a topping pattern in there, and I'm not trying to get too wonky, but that's a way of saying that those who bought back in June were less inclined to buy in July, and you can really see this stock go down quickly. Should that occur from a sentiment perspective and just from a chip perspective, because you would see other chips right along with that decline, that could be really negative for the markets overall. But today, we clearly have a rebound from all that tech selling last week that did technical damage that looks like it will come back out to play. And, if you're to connect it to, of course, the events of yesterday, last week, one reason big tech was down is that there's certainly a perception that the Trump ticket may be more negative for big tech. J.D. Vance has, not been shy in terms of saying that he would consider some crackdown, some antitrust action there. So today we're seeing a little bit of rebound. Another piece of it is with President Biden out, it was his administration that made that very baffling proposal to tighten down curbs on China chips. I'm not sure why anybody would do that given the circumstances, but if he's no longer there, we don't know that a Harris administration, a potential Harris administration, or if there's actually somebody else who's nominated to that ticket by August. And let's not say that we know that that won't be the case, because anything seems possible at this point. I think that's why we're seeing some relief for this big tech. So that's what really has my eye front and center.
NVIDIA, frustratingly, at least to me, doesn't report earnings until May 22nd. I feel like that's
August 22nd?
Yes, August. I'm sorry,
yes,
August 28th. August 28th.
They're always off.
Yeah, August 28th. Yeah, back in time.
Yes.
But it seems like that's the bellwether for the market, in my mind.
Well, speaking of that, Piper Sandler's out today saying that they think that they're going to put up a big beat. If I remember correctly, they're saying that they think that they could put up another $2 billion. I thought it was going to be $1 billion, but another $2 billion beat. So this company continues to put up these massive beats, both for the quarter that was and the guidance. At some point, that is not going to continue. But so long as it does, the music hasn't stopped. And I think you're going to see. It's hard to say because honestly, this chart does not look good.
So before I let you go, any other stocks that you're watching that have some big moves? I mean, small caps are sort of doing nothing. What else is on your mind?
Well, I'm taking a look from a sort of a peripheral standpoint at Verizon. It's down 6.3%. That is the worst point drag on the S&P 500. The worst day, actually, funny enough, just since last Monday, down for a second day.
Last Monday was like a year ago, though.
I know, which is kind of amazing. But they missed estimates as fewer customers upgraded their wireless equipment. So, this is one of those cyclical matters. Plus, out of the October lows of last week into today, up 40%. So, prices to perfection to some degree, and investors didn't get it. So that stock, again, the worst drag on the S&P 500, countering all that big tech strength.
All right, Abigail Doolittle, thank you so much. We appreciate it. Abigail, she covers all the markets for Bloomberg. We appreciate getting a few minutes of her time here. Again, in terms of the earnings, Tesla and Google tomorrow after the close, so keep an eye on that. All right, you woke up, or yesterday, I'm coming out of the ocean, get back to my little group of people, buddy looks up and says, Biden's out. And you're like, oh boy, here we go.
I have a better one for you.
Yes.
We were at the Bloomberg event at the Botanical Gardens, and you could just see like all the media people were like on their phones. And my daughter's like, Mommy, don't worry about it. It's Sunday. And I'm like, I don't know. We're all working now.
And so the real question is, and we're all just trying to start to figure out what could all this mean. Fortunately, we have a person that we pay to do this. Nathan Dean, he's a senior policy analyst at Bloomberg Intelligence. He's in D.C. He's really good. Nathan, what's in your sourcing and the people you talk to down in D.C., what's the feeling today about what happened to the Democratic ticket over the last 24 hours?
Well, I mean, look, there's been a lot of pressure on President Biden over the last couple of weeks to drop out. And, you know, I think this just culminated with this effort that, you know, Vice President Kamala Harris has filled that void. Now, look, she's not the nominee. You know, that doesn't happen until either there's a virtual roll call or to the convention. But we've seen so many endorsements over the last few hours and, you know, just so forth that, you know, we're presuming that she is the nominee in our research and our notes. And so we put out actually a big note on the terminal this morning talking about what would life be like under a Harris presidency. And it's a lot of status quo for banks, EVs, big tech, and so forth like that. The one caveat is on taxes. We've often said that this election is really, the two major things about this election are tariffs and taxes. And Kamala Harris's record in her tax, you know, aspect of it has been a little bit more, you know, I'd say progressive than what President Biden has said. But ultimately, we viewed Kamala Harris, I'm sorry, we viewed President Biden as moving more towards Kamala Harris's policies when he became president, rather than Kamala Harris moving towards Biden's policies. So a lot of this, if she becomes president, will be status quo.
Oh, that's really interesting. So I was going to ask, where is Vice President Harris farther left than President Biden? Where is that biggest daylight?
So the one thing that we actually hung down on was her record as Attorney General. And, you know, just indicative of one of her actions is she joined about 47 other states, including the District of Columbia, on a $25 billion settlement on home foreclosure practices. And a lot of her campaign speeches when she was running for president in 2020 was talking about how she took on big banks. Now, you know, to us, that means there's a lot more consumer protection coming in the cards, whether it's the Consumer Financial Protection Bureau or whether it comes through acts of Congress, or maybe it's even executive orders like, you know, continuing President Biden's student debt relief plan. But I think there's going to be a lot of focus on this idea of low to middle income consumers, protections against big corporations, and a lot more in terms of disclosures and so forth like that. Now, is this a material impact on big tech or on the big banks? Probably not. A lot of it has to get passed through Congress, but ultimately, it's certainly a headline risk that I would keep in mind for those sectors. Is in particular is just to keep in mind, you know, that if she were to focus on this, and specifically, let's just pick on antitrust. If she were to focus on antitrust, there's a lot of you know, intense scrutiny, more scrutiny than she could put there than a Biden administration could.
All right, a lot of my M&A banker buddies are wondering what would a Harris administration mean for antitrust, because Biden's been nobody to the M&A world. Is it feeling status quo there as well?
You know, this is one of those situations where I think whoever wins as president is probably not going to be helpful to your M&A banker buddies, because on one hand, you have the continuation of the Biden presidency with Lena Khan at the FTC and taking a very skeptical look at mergers. I mean, just in the financial space alone, you know, some of these merger reviews go over a year, if not longer. And, you know, we saw certainly with the TD Financial merger, they pulled out as a result of this. But then on the flip side, you have Senator Vance and President Trump. And remember, this idea of economic populism is rampant through that, you know, that RNC agenda at the moment. So, you know, Senator Vance even came down to a Bloomberg event here in Washington and called Lena Khan, the FTC chairwoman, Biden's best pick, and insinuated that President Biden would even or President Trump should even keep her around. Now, I don't think that's going to happen. But unfortunately, Paul, for your M&A banker buddies, I don't think any other way this gets around, whether it's Harris or Trump, it's going to be a very skeptical world for antitrust and M&A.
So Paul's talking to his M&A buddies. I'm thinking about my energy buddies, because one area where it feels like President Harris could be farther left, of course, is energy. I was telling Paul earlier that she's been kind of anti-fracking, she's been anti-offshore. California is notoriously not loving any fossil fuels. How much of that do you think we have to really start considering?
I think it's important to consider it. In fact, our colleague Rob Barnett just put out a note about 40 minutes ago talking about this and the importance it has on the renewables sector. So, you know, Senator Harris, Vice President Harris, you know, certainly has pursued a clean energy agenda. And one of the things we see in, you know, her presidency is a boosting of the Inflation Reduction Act. I don't want to say going back to the Build Back Better 3.0, you know, some of the ideas that were floated around. She'll have her own ideas here, but this idea of the Inflation Reduction Act needs to be protected and enhanced. So if you're in the renewable sector or solar sector, it certainly could be a boon idea if, you know, Vice President Harris wins. But I would also just recommend it, or, you know, I would also just offer this, that a lot of it also depends on who takes up Congress, because if Vice President Harris wins and the Republicans take one, if not two chambers of the House, then a lot of those initiatives are going to be scaled down and actually dramatically lowered and so forth like that.
All right, but we know Elon Musk is a big supporter of Trump, but it sounds like what would a Democratic Harris administration mean for the Elon Musk of the world and the EVs?
So, you know, for the EV side, I think it's actually a continuation of the Inflation Reduction Act tax credit, if not an enhancement of that. You know, look, tax reform is going to happen next year no matter what, because the Trump-era tax cuts for individuals expires at the tail end of 2025. And whether it's Vice President Harris or President Trump, neither of them are going to want to increase taxes for low and middle and income, you know, Americans. So for the EVs of the world, I would say under a Harris presidency, you'll certainly have protection from that tax credit in the IRA. You potentially could have an enhancement of that. You certainly will have regulatory policies trying to boost EV usage and so forth like that. Comparing it against the President Trump presidency, where, you know, he has said that he doesn't like electric vehicles. Obviously, he has Elon Musk whispering in his ear and providing $45 million a month in PAC funding. But ultimately, I think the Republicans, you probably would see a scaling back of those tax credits, maybe, you know, just additional, you know, restrictions on EVs and so forth like that. But, you know, with the Trump presidency, we'll have to see if he wins, and also if Elon Musk is whispering in his ear in come January and February.
Taxes. If former President Trump were to get a second term, is there any consensus in Washington, given the makeup of Congress? And I guess we have to see how Congress shakes out. But what, if anything, could a Trump administration get done on taxes?
Yeah, so, you know, the way I think about the tax debate with my colleague Andrew Silverman is really in terms of timing. So the first thing you'll note is the election. If the Republicans take the House and the Senate and the presidency, then they have this opportunity for reconciliation. This is how they got the Trump-era tax cuts through in 2017. It allows them to actually move forth and enhance or, you know, essentially conduct tax reform, and they can bypass the Democrats. So if the Republicans win the House, the Senate, and the presidency, then this President Trump's idea of lowering corporate tax rates is certainly in the cards. Now, I have seen statements from House Republicans saying, maybe we don't want to do that so much, but I do think that this would be President Trump driving this. Now, if you get more of a gridlock Congress, well, then the power of Congress is going to come out, and the House and Ways and Means Committee, whoever controls it, is certainly going to want to play here and tell the presidency this is what we think. And so if you get a gridlock Congress, a lot of the tax reform or tax relief ideas that are out there are going to be scaled down and narrowed, but with one objective: not to increase the individual tax relief or tax cuts for that individual. If you get President Harris, you may see tax increases for individuals who make greater than $400,000, but I think most individuals in the United States at the end of 2025 probably won't have their taxes altered all that much.
Literally, my head hurts from all the different possibilities. I do not know how you do this, Nathan, on a daily basis with all the individual sectors. Okay, before I let you go, now what? Like, now what are you paying attention for? What is most on your radar now as you go talk to clients?
So, you know, the most important thing for us is obviously, you know, does Kamala Harris become the vice president or the presidential nominee? I think she will. Just remember, the Democrats have to have a virtual roll call to get their person on the ballot for the state of Ohio. I would anticipate that starting in August 1st. Next thing would be, you know, Kamala Harris's vice presidential pick. We're cautioning clients, look, she has plenty of time. She's going to do this in a way that is politically advantageous to her, and she doesn't have to name somebody until the convention in Chicago in mid to late August. So, you know, those are probably the two most important things. But also just remember, on the flip side, the tariff argument for President Trump is real, and it's certainly a risk that I think investors should pay attention to.
All right, Nathan, thank you so much. We appreciate you. Really, really great stuff. Nathan Dean, Bloomberg Intelligence, Senior Policy Research. I cannot recommend his research enough because it can go into all the different sectors as well as kind of game out the different possibilities and where we kind of go from here.
Yep, and you know, So I guess that virtual roll call thing, or the virtual, that's a key date, right?
Yeah, apparently that happens between August 1st and August 7th. That's what I was reading about yesterday. And my mind is also spinning as to what winds up going to the courts in terms of where the money is accessed and who was able to get control of all that fundraising money. Also in terms of getting the ticket on the ballot in all the states. I don't know.
See, I kind of like these snap elections that the UK and Europe holds. It just gets it done really quickly.
You know what I like about the UK? Is that you're not allowed to campaign for a long period of time. You have like very strict campaign times.
How about the signs on the lawn thing? Is there any rules on that? Because that's a big issue for us out in suburbia.
I don't think you can do that. I mean, I'm kind of making that up, but I mean, they have such strong restrictions. Anyway, much more coming up. We are going to continue the conversation about the markets and what it means for the election. Brian Jacobson, Chief Economist at Annex Wealth Management, will be joining us.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, and I'm John Tucker in the Bloomberg News. And with this Bloomberg Business Flash in the equity markets, Seeing a tech-led bounce back today. Information technology and communication services, they're the best performing industry groups in the S&P 500. And NVIDIA shares most active, up 2.2%. And ahead of its earnings tomorrow, you have shares of Tesla up 2.2%. Alphabet, that's up 1.7%. Bloomberg Intelligence, interestingly enough, says the S&P 500 earnings season is starting off at a faster gallop than expected, with financials on track to quadruple earnings per share growth forecasts since the second quarter season started back on July 12th. 71 S&P 500 companies have reported earnings growth on track for close to a 10% year-over-year increase, well above the preseason expectations. S&P 500 right now 40 points higher. That is up 0.75% at 55.45. The Dow up 99 points. The NASDAQ 100 up 192 points. That is a rise of about 1%. Also, the smaller caps, the Russell 2000 index, that's up about 0.5%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alex Paul.
All right, John Tucker, thank you so much. We appreciate that. A little bit of an unwinding of that Trump trade a little bit, perhaps. We'll have to see how that plays out. Brian Jacobson, he joins us here. He's the chief economist for Annex Wealth Management, joins us from Brookfield, Wisconsin, via Zoom. Brian, I'd love to get just from your perspective, like from an economic perspective, has anything changed, or if at all, over the past 24, 36 hours with the change in the Democratic Party in terms of this upcoming election?
Yeah, thanks for having me. I think that it really has changed quite a bit as far as just the probabilities of the different outcomes. If you look at some of the prediction markets, Trump's probability of winning the election went from about 65 to 66% down to 60%. It's still, I guess better than even odds that he's going to win, but that has come down. And so now it's a matter of what is the policy environment likely going to be for the next 4 years. A little bit more uncertain. Here at Annex, we think that it's still quite likely that we do see some sort of extension of those Trump-era tax cuts. Really, what's kind of on the chopping block, perhaps, if Harris wins, is that the tax cuts for those making $400,000 or more. And then also, as far as what's going on with the corporate tax rate, there's estate tax issues as well. And then the regulatory environment. We're seeing a bit of the reversal of that rotation towards small caps and value. But we think that this might be an opportunity to continue to add to those types of positions, not necessarily based upon the election outcome, but more based upon just that's where in the market we think there's a little bit more value to be had.
So based on that, I wonder, though, if the curve is the one where we're really going to wind up seeing more of the action based on whether it's a President Harris or President Trump. And this is even assuming that Vice President Harris is the nominee. Because it feels like the steeper curve is what we're going to get, but the why we're getting it steeper may be different depending on who's in the White House.
That's absolutely right. And I think it's actually a little bit maybe wrong to think that either one cares that much about the debt or deficit, mainly because that's not really part of their platforms. It really seems like it's about revenues, as far as, with Trump wanting to increase revenues through tax cuts and more growth, perhaps Harris or whoever's on the Democrat side to increase revenue through, taxing those making $400,000 or more a year, corporate taxes. And really what seems to be lacking is a discussion around what the government can actually control, which is the spending side of things, right? Revenue is really driven by economic activity, which isn't completely under the government's control. So I think that in either scenario, the moves in the yield curve are just as uncertain.
So, Brian, given what we know about the politics, which is a lot of things are unknown here, what's your economic call here? How do you think this economy is faring, and how do you think the next 6 to 12 months are looking for this U.S. economy?
I think things are looking pretty good. On our investment committee, we discuss about all the incoming data that we get from Bloomberg, and it really does look like we had a decent recovery with manufacturing and retail sales over the last 2 months. We have to see if there's a little bit of carry through. We do know that lower end consumers are feeling the pinch. They're beginning to be a little bit more prudent as far as instead of the YOLO, the you only live once attitude towards spending, they're becoming a little bit more price sensitive. But we think that there's enough economic momentum to keep the consumer plowing things forward here. And we think the recession risk is fairly low. A lot does hinge on whether or not the Fed will cut rates in time or not. And for us, that does mean a September rate cut. We think the data will dictate that they can cut. And so if they end up not, then we'll have to revise our estimates.
So based on that, do you like small caps here?
Yeah, we do. We've actually been overweight small caps and mid caps, more on the quality side. So we prefer those that are more profitable because, as you probably know, 40% of small caps aren't profitable. So we prefer sort of having that profitability along with that valuation lens that has led us towards small and mid caps, but then also like industrials, energy, and we're warming up to financials. It's an area that we've been very underweight for a long time, and that's an area where if we get the credit conditions continuing as they are, as opposed to deteriorating, we think financials could stand to benefit from this.
What do you guys make about these concentration risk, Brian, in the marketplace that we've seen of these Magnificent Seven? How concerning is that to you? Do you fade that? Do you try to find value outside of that? How do you guys deal with that?
Yeah, we've been really focused on concentration risk for a while, and to an extent, it's led us to underweight those names just because we don't necessarily want to put all of our or most of our eggs in that one particular basket, especially when that basket isn't particularly diverse in terms of sector exposures or thematic exposures. And we think that this is a period of time in which that rotation trade can come back in. It broadens out. A lot is going to hinge on the fundamentals. We do need to see that improvement in the small cap and mid cap earnings. They have gone through periods of recession, earnings recessions over the last 3 years. It's almost like they kind of get above water and then they have a quarter-on-quarter decline in earnings once again. So we do want to see a little bit more traction, but a lot of those companies have right-sized for economic slowing, not an economic stop, but for economic slowing. And so we do think that they can actually move higher, have those fundamentals support those valuations to actually have a pretty decent end of the year and 2025 and beyond.
What's weird, though, is that the reason why the Fed is going to cut is because the economy is slowing, which in theory shouldn't that be bad for small caps? But where's the nuance there that I'm clearly missing?
No, you're absolutely right. Historically, the Fed has cut mainly because they held rates too high for too long, and they were late to respond to economic slowing. Now, there's a difference in going from great growth to good growth as opposed to going from good growth to horrible growth, right? And so we went from great growth in 2023 to more sustainable. And that will be the key thing, is whether or not we do tip into a recession. So if the Fed is cutting because the inflation data allows them to, as opposed to the growth data telling them that they have to, I think that's going to make all the difference in the world. It also will make a huge difference in, say, the fixed income space with credit spreads, how tight they are. We can have those spreads widen, but mainly because not that corporate yields are moving higher, but treasury yields are moving lower.
What do you need to see out of earnings here? What do you think the market needs to see out of earnings here, Brian? Do we need to have a big beat to continue to support this market?
I don't think we need to see a big beat. I think it really is about they just need to have a more pleasant tune or attitude towards the future. It's more about the guidance that they give. Last week we saw ASML, TSMC report. Those fundamentals were fine, but then people had to reassess what that outlook looked like when it was announced that the U.S. government was going to crack down on the ability to export that technology to China, or with candidate Trump's comments about the relationship between the U.S. and Taiwan. So it's really more about that longer term future. It's not about what have you done for me lately with the earnings numbers, but it's more about that guidance. Are there signs that new orders are beginning to pick up? Are they actually going to be able to meet in some areas what seemed like perhaps unrealistically lofty growth expectations in the tech area? That's why we prefer more mid-cap and small-cap tech. Just seems like those growth expectations are a little bit more modest, and there's less risk with some sort of negative guidance going forward.
Just one more point on that. When you talk about small caps and mid caps, is it value or is it growth within those areas?
We've been overweight small cap more on the value side of things. On the growth side, you do tend to get it more dominated by like biotech and some of the areas where it might be a little bit more speculative. We do believe firmly in balance, having the exposure there. But in terms of if you put on that profitability filter, that would lead you more towards the value side of things. But you don't necessarily want to only look at that profitability. You also want to incorporate other dimensions of quality, like the leverage that those companies have. Now, I guess that is one of the dangers is if you are in, let's say, small and mid-cap quality where they have pristine balance sheets, then you don't necessarily get these rip-roaring runs higher in the stock price when it looks like the Fed is getting closer to cutting, because that then tends to favor those areas that have more of the highly levered balance sheets. But when we're constructing portfolios looking more for that longer-term holding, putting those two together, the profitability, valuation, reasonable leverage, it does tend to move us a little bit more towards the value side as opposed to the growth side of the spectrum.
All right, we really appreciate it, Brian. Thank you so much. Brian Jacobson, he's Chief Economist at NX Wealth Management. A really great perspective joining us from Wisconsin. And as a reminder, we are waiting for Vice President Kamala Harris to deliver some remarks at an event celebrating the National Collegiate Athletic Association at championship teams from the 2023-2024 season on the South Lawn. Normally, we wouldn't bring that to you, obviously, but we want to see if she says anything else. No, we would not. Right? No, this is the first public appearance since yesterday. Switch of the ticket. So we are going to bring that to you live. In the meantime, let's get you updated on world and national news. And for that, we go to Michael Barr. Michael.
Thank you very much, Alex. Paul, John, West Virginia Senator Joe Manchin says he won't compete with Vice President Kamala Harris for the Democratic presidential nomination now that President Joe Biden has left the race. Manchin left the Democratic Party this year, but had considered re-registering to vie for the nomination against Harris, but says now that he would not be a candidate. Manchin also says both sides of the political aisle should reach out to moderate voters.
Neither side can win without the sensible, moderate middle. They can't do it.
Manchin spoke today on CBS Mornings. Meanwhile, Republican Virginia Governor Glenn Youngkin says he was not surprised to hear Biden was stepping aside.
I do think that it's important that the polls really haven't moved much in the last day. Right. And I think that reflects the fact that Virginians and Americans recognize that it was the Biden-Harris administration, and she owns the performance, and it's not going to be any different than the one that Joe Biden had.
Governor Youngkin spoke to Bloomberg at the Farnborough Air Show in the UK. The head of the U.S. Secret Service is getting grilled by the House Oversight Committee on Capitol Hill after the recent assassination attempt against the former president. Kimberly Cheadle says there were no assets denied for the Trump rally in Pennsylvania. There are warnings that smoke from fires in the West are impacting air quality across the region. A wildfire in Riverside County, California is burning homes and triggering evacuation orders. Riverside City Council member Sean Mill.
We'd ask that you stay out of the area, and if you've been asked to evacuate, please comply with the evacuation orders for your safety and those of our first responders.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg Now for a Business Flash. Here's John Tucker.
All right, thanks, Michael. Stocks are higher, but the major averages pairing some of the earlier gains. S&P 500 up 27 points. That's a rise of 0.5%, 55.33 on the index. The Dow Jones Industrial Average bouncing between gains and losses right now, up 14 points, and the Nasdaq 100 is up 125 points. That's a rise of 0.7% after being up close to 1.5% earlier. And the Russell 2000 index of smaller cap stocks, that is up 0.3%. Of course, the investors considering whether Joe Biden's exit from the race boosts the odds of a Democrat victory. Initially, U.S. Treasuries, the yen and gold, all common refuges from volatility, saw modest demand. Kathy Jones of Charles Schwab, she offered this view earlier.
There are some long-term implications, but I think in the near term, this is not something that's probably easily tradable.
And among the most actively traded shares of NVIDIA, that is right now the most active. That is up 2.1%. And Tesla, ahead of its earnings report tomorrow, right now 2.1% higher. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Alex.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, we're live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube as well. So you can head over to youtube.com and search Bloomberg Podcast. Looking at the live audio feed of the South Lawn of the White House, waiting for Vice President Harris to make some comments to some NCAA athletes. It's supposed to be at 11:30, but we'll see. We'll bring it to you when it happens here. But what a lot of folks are trying to do today in the aftermath of President Biden pulling out is trying to get a sense of, are there differences, or to what extent are there differences between President Biden and Vice President Harris's key policy issues and positions? So one of the folks we're really concerned, or one of the areas a lot of folks are concerned about, is taxes. Andrew Silverman, senior policy analyst for Bloomberg Intelligence, he looks at this tax stuff. He joins us here in our Bloomberg Interactive Broker studio. So we got Nathan Dean for all the crazy policy stuff down in Washington. We got Andrew Silverman who looks at the taxes, because that is a huge issue here. Andrew, thanks so much for joining us. What do we know about Vice President Harris's thoughts about taxes and how that may differ from President Biden?
Right. So I think at least initially there's a sense that Kamala is, is Joe Biden 2.0, that she's just taking over his tax policies where he left off. But I think it's important to note two things. First, that when vice presidents become president, they tend to have much different tax policies than their predecessor. For example, Lyndon Johnson enacted one of the largest tax increases in U.S. history during his presidency, but Kennedy had cut taxes drastically, and Reagan famously cut taxes twice from 70%. That was the top tax rate in 1982, 70%. He cut it all the way down to 28%. And then when George H.W. Bush became president, if you remember, he said, read my lips, no new taxes. And then he enacted a tax increase. So, people change, obviously. The Nixon of 1960 had different tax policies than the Nixon of 1968. But when Kamala was in the Senate, she was significantly to the left of Biden, certainly in the Senate. She proposed a refundable tax credit for home rental payments. She wanted to provide tax assistance to low-income taxpayers, small businesses as well in lower-income communities. She proposed an excess profits tax on pharmaceutical companies, a banking tax. And I'd also note that the two senators with whom she sponsored bills most frequently were Elizabeth Warren and Bernie Sanders. Oh, great. So
for a lot of folks.
That feels like enough said. But at the same time, a lot of companies are going to be investing in the U.S. through programs like the CHIPS Act or the Infrastructure Act or the IRA. Wouldn't high taxes mess that up? Wouldn't that be counterintuitive then to them actually spending money?
Right. And, I think a lot of the way that the tax policy will progress after the election is going to be dictated by who wins in Congress. So certainly, Congress is not going to repeal the Inflation Reduction Act if we have a majority Democratic House. They're not going to let the Tax Cuts and Jobs Act fade out at the end of 2025 if we have majority Republicans in the Senate and the House. So, if we have a President Trump next year in 2025, but we have, Democrats in the House and Republicans, in control of the Senate, chances are we're going to have pretty much the same tax policy that we have today, because we're going to have gridlock. Certainly, and Harris as well. If she's president, but we have just Democrats barely in control of the House and maybe even Republicans in control of the Senate, even if she wanted to raise taxes on corporations, that's not something she'd be able to do.
How about on the other side of the aisle? What did we learn from the Republican convention last week about what President Trump and the Republicans might try to do from a tax policy? Again, in Mr. Trump's first term, big tax cut was enacted. How about if he were to have a second term?
Well, again, it depends on what kind of coattails he has if he wins. But certainly, I think priority number one, absolutely, without a doubt, is the Tax Cuts and Jobs Act. If he has enough of a majority, he would like to make it permanent. If he doesn't have enough of a majority, he'd like to at least extend it. And if he doesn't even have that, he'd like to extend certain portions of the Tax Cuts and Jobs Act. I think number one on that list would be corporate expensing. permanent expensing. So, and I've even heard some Republicans say that if they can get capital expensing made permanent, that they would even be willing to increase the corporate tax rate.
Well, that's interesting. We are keeping our eye on what's happening at the White House in the South Lawn. Remember that VP Kamala Harris is going to be delivering some remarks. They're celebrating the National Collegiate Athletic Association Championships teams. We are currently looking at the teams coming out and the individuals. We will bring a part of that to you live. Hey, Andrew, when you're looking at what's next, what are some key words, phrases, like what are you going to be keying in on to like help you guide and sort of where we should be looking at in terms of direction?
Yeah, I mean, I certainly.
As in, like, if there's a VP pick potentially for Kamala Harris that is more moderate or more left, or like, what are the key things?
Oh yeah, absolutely. I think her VP pick is going to indicate which direction she's going in. If she picks somebody, as progressive as she was in the Senate, certainly that's going to indicate that she wants to move a little bit leftward. But if she picks somebody more moderate, then certainly she would tack back to the positions of Biden.
All right, we're looking right now at this South Lawn of the White House, and I believe Vice President Kamala Harris is walking towards the stage with a group of other folks. Again, in the backdrop are many of the athletes who won titles in 2023 and 2024. So keeping an eye on that. So when the Vice President does take the podium and deliver some remarks, we'll certainly dip into that.
We will bring that to you live. Andrew, okay, what else are you looking at? So we're looking at the VP pick. We're obviously looking at taxes. What else is on your radar?
So I'm writing a note right now, actually, on J.D. Vance. And I think just as the vice president is being mischaracterized in terms of what her tax policies might be, I think that J.D. Vance's tax policies are being mischaracterized. I think to a great extent, he's being portrayed as an arch conservative, but he's very much a populist. And a great example of that is him co-sponsoring a bill with Sheldon Whitehouse on corporate acquisitions and mergers, saying that corporations that earn enough profits would be barred from being able to do tax-free acquisitions. So, I mean, that's an extraordinarily progressive position for tax purposes, and, he's totally on board for that. He wants to tax college endowments and use that to fund. Yeah, and use that to fund non-college training programs. So, not exactly a conservative tax policy. He wants to. He wouldn't join the rest of the conservatives in trying to get rid of a gun tax. He actually only wants to repeal a portion of that gun tax. So,
all right, there's a lot to pay attention to. So we appreciate that. Andrew Silverman, Senior Policy Analyst for Bloomberg Intelligence, really looking at the tax implications of different administrations looking forward. Right now, we want to just get a lay of the land here from Washington, D.C. Bloomberg News Deputy Managing Editor for the U.S. Government, Wendy Benjaminson, joins us. Wendy, I'd love to just get your takeaways. We've had a few hours here 24 hours to kind of digest what we've seen in the Democratic Party. What's the thinking these days in your circles?
It looks to me like Kamala Harris is certainly the clear and away front runner for the Democratic nomination at this point. She is working the phones. She is trying to nail down the delegates. She is short of everything but the leadership's endorsement, because I think they still want to talk about the possibility of an open process and not make it look like a coronation. And, that didn't fare well with Hillary Clinton in 2016 when she was sort of the nominee by fiat. Although I think everyone wants to move on and get this wrapped up, where our reporting shows that one of the headwinds that Kamala Harris faces is that she only joined the Senate in 2017 and then started running for president in 2019.
Wendy, we just got to interrupt you 1 second because VP Kamala Harris is speaking now on the South Lawn. We're going to listen in.
Student athletes, and it is good to be here with so many leaders, including, of course, members of Congress, members of our administration, and our extraordinary athletes. Our president, Joe Biden, wanted to be here today. He is feeling much better and recovering fast, and he looks forward to getting back on the road. And I wanted to say a few words about our president. Joe Biden's legacy of accomplishment over the past 3 years is unmatched in modern history. In one term, he has already, yes, you may clap. In one term, he has already surpassed the legacy of most presidents who have served 2 terms in office. And I first came to know President Biden through his son, Beau. We worked together as attorneys general in our states, and back then, Beau would often tell me stories about his dad. He would talk about the kind of father and the kind of man that Joe Biden is. The qualities that Beau revered in his father are the same qualities that I have seen every day in our president. His honesty, his integrity, his commitment to his faith and his family, his big heart, and his love, deep love of our country. And I am firsthand witness that every day our President Joe Biden fights for the American people, and we are deeply, deeply grateful for his service to our nation. And so with that, on behalf of our president and Dr. Biden, I am honored to welcome all of you to the White House to celebrate the achievements of these great athletes. Every one of them is a national champion, a national champion. In America, tens of millions of people play a sport as a child, and the best of the best grow up to become national champions. Here today, we have 7 undefeated teams, 11 repeat champions, and 20 first-time winners. Some of you have represented our nation on the international stage in World Cups and World Championships. And later this month, 6 of you will represent our nation at the 2024 Olympics in Paris. As members of Team USA, you are ambassadors for our nation, and with pride, we will cheer you on. And we look forward to congratulating you when you bring home the gold. So to all of our athletes, I know it was not easy to make it to this moment. Each of you has faced challenges and obstacles, and you have endured. You have fought back and fought through. By doing so, you demonstrated that true greatness requires more than skill. It requires grit and determination. You all know what it means to commit and to persevere. And you know what it means to count on teammates. During the course of a long season, sports teams become a family. You rely on each other. You develop relationships that will last a lifetime. And you make the people around you better in every way. And when you play, you inspire people across our nation. You remind all of us what can be achieved with hard work and ambition. And of course, none of you made it here alone. Today, you are surrounded by the people who stood by you every step of this journey. The folks who support you on and off the field, your friends, your family members, your coaches, your trainers, and teachers who for years have cheered you on. So today, again, let us give them a round of applause.
All right. That is Vice President Kamala Harris. She is speaking to a group of NCAA championship athletes from the 2023-24 season there on the South Lawn of the White House. Let's get back to our guest, Wendy Benjaminson. She is down in Washington, D.C. She is Bloomberg News Deputy Managing Editor for U.S. Government. You know, this is new ground for everybody, Wendy. What do you think next steps are for the Democratic Party, the DNC, to kind of move this party forward?
Well, the Democratic Party is really stumbling around in the dark a little bit because this has never and I mean never happened before this way. When Lyndon Baines Johnson dropped out in 1968, it was March. Only Iowa and New Hampshire had even voted. So the next candidates in line competed in the primaries, and then, the election went on. We are less than a month before the Democratic National Convention. 99% of the delegates are pledged to Joe Biden. It's a mess, and everyone is acknowledging it's a mess. So Jamie Harrison, the DNC chair, last night put out a statement saying basically, I don't know, guys, we'll figure this out. We'll get back to you. And there is a little bit of tension within the Democratic Party where there are some who really want it to be an open nominating process where other candidates can, make speeches and try to win over the delegates. Kamala Harris is working those delegates by phone starting on Sunday to try to get them to pledge their loyalty to her. Biden can certainly ask them to pledge their loyalty to her. The interesting thing is that all the Democrats who might have run against her for the Democratic nomination are actually saying now that they are endorsing her for president and the races for VP. So the situation may solve itself in the next few days. We believe even as soon as Wednesday or Thursday of this week, she may have the delegates sewn up, but who knows? It's 2024.
Yeah.
Who knows what's going to happen?
Also, 3 days again is like a year. So like a lot could happen in the next 72 hours / year. Wendy, what about big donors? Clearly the small donors came in a flood yesterday. Where do big donors stand on a Kamala Harris?
Well, as I understand, George Soros is backing Kamala Harris. Other billionaires are pushing. I think Bob Novogratz is his name. He's been pushing for a more open process. So, they're individuals. They're all over the map, depending on their personal beliefs.
What do we need to see? What's the timing on a VP pick, do you think? Would she wait to the convention if it were Harris?
She can wait till the convention for that. Yeah. Okay. I think she can't be Trump did, right? Often it's announced ahead of time. So, like in previous years, normal years, the Democratic nominee or the nominee of any party names their running mate maybe a week or so before the convention, so the two of them can go on this sort of honeymoon tour before they go to the convention together and make their big splash. Other years it's done at the convention, but like Trump did this year with J.D. Vance, it can be done at the convention, and or she may decide, if she has it sewn up and there's still talk of an open process, to just nail it down with a VP pick sooner than that.
Do we know what an open convention, like what does that actually mean? You're laughing at me. This is not a good sign.
Well, the last one was in 1956, and even I wasn't born then. So who knows? That's why I think Jamie Harris.
That's a really fair answer.
I'm sorry. I mean, presumably it is where all the other candidates would make a speech to the delegates, ask them for their vote, and then there would be a vote, a nominating vote, and the person with the majority of the delegates would win. But this has been such a preordained event for so many cycles now, for so many decades. I mean, more than 60 years that, like I said, we're in uncharted territory.
What do you expect?
One point I should make is that the Democrats do plan to have a virtual nominating roll call before the convention because of the Ohio ballot deadline. So that may speed things up. They may throw that out the window. Yeah, no one knows.
Okay, so what do you expect former President Obama to say, and when do you expect him to say it?
He's in a tricky wicket right now a little bit. He was apparently active in convincing Biden to step out. There's a tiny little bit of irritation reported between Biden and Obama because Obama encouraged Hillary Clinton to be the nominee in 2016. She, as we all know, lost to Donald Trump. Biden very much wanted to run in 2016, so his attitude toward the former President Obama now is, oh yeah, well, you put Clinton in last time and see what happened. But now that he's out of the race, I think Obama will be very carefully and gingerly steering this the way he wants, and we don't know today whether he wants an open process or will endorse Harris. He has not yet, I think, because he doesn't want the process to look like a coronation.
Right. Who do you, when you guys talk about VP picks, like what is the thinking and the logic behind how a VP would be chosen in these circumstances? Is it based on swing states? Is it based on experience? Is it based on sex or color? Like what do you think?
Yes, is the short answer. But I think you want to offer voters a contrast, and you want to give them a reason to turn out in the states that are important. So they are looking at Josh Shapiro, the very popular governor of Pennsylvania. They're looking at Andy Beshear, the very popular Democratic governor of Kentucky, a normally red state. Roy Cooper, the popular Democratic governor of North Carolina. And given that Harris is from California, that gives you a geographic spread. It gives you, with all of them, that would be a white man running with the Black Asian woman. That also makes voters more comfortable. It would be historic if she picked Gretchen Whitmer, the governor of Michigan, because that would be the first two females on the ballot, which would be fascinating. Not sure America can do that yet, but
I don't think we can do that yet. I'd like for us to do that, but I don't think that's, I can't. One step at a time.
It's interesting that the two women are saying it can't happen, but
I know.
I think we're right.
We were burned so much in 2016 about how much we didn't want a woman candidate. But anyway, I digress. Go ahead.
Gavin Newsom is probably out as VP this time because he's also from California, and there is some rule or practice that the VP and the top of the ticket are not from the same state, which is one of the reasons Trump didn't pick Marco Rubio of Florida. So Newsom's probably off the list, but he has endorsed her, so no bad blood there.
All right, Wendy, thank you so much for joining us. Really appreciate getting your perspective. Wendy Benjaminson, she is a Bloomberg News deputy managing editor for the U.S. government here, so we'll keep an eye on that. The market's kind of mixed here. We have the S&P up 30 points. That's a half of 1%. The Dow's off 7 points. But the NASDAQ is up about 0.8% there. The yields on your Treasury, a little bit slightly higher here, up a couple basis points for the 10-year Treasury, 4.26%. And I'll call out gold. Gold is actually pulling back a little bit off about 0.6% because it had such a great move higher up, gold. And you would have thought with some of this uncertainty, maybe it moves higher yet again, but we'll see.
Well, the Russell is actually up by about 0.5%. So let's pretend that DC stuff didn't happen and we didn't just have a 2-hour show talking about DC and the effect on the markets. I would come in here and say, oh, okay, we're kind of taking a pause from that rotation, but the Russell is still strong, and we're going to wait for some big cap tech earnings coming out that start tomorrow after the closing bell. We got Tesla, and we have Google to just really get a feel for how the Mag 7 are going to deliver. So we're just kind of running in place after last week's sell-off. That's what I would say. I could be wrong, but that's what I would say.
And that would make, that had plenty of sense there, but now we've got a Democratic Party that is searching for a candidate, and we've got an election in several months, so they tell us.
So they tell us. And to that point, this wraps it up for Paul and myself for Bloomberg Intelligence on this Monday. But coming up, Balance of Power with Joe Matthew, who came back from vacation for this, and Kelly Lyons joining from Washington, D.C. starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Kaylee Lyons, I'm Joe Matthew. The Monday edition of Balance of Power. Kaylee, Joe Biden is out, and now the hard part begins. As more Democrats coalesce around Kamala Harris at this historic moment, we just heard from her with questions about the process. She didn't tell us anything when she spoke from the White House this morning.
No, of course, she still has a lot of work to do to actually lock up the Democratic nomination. Nothing is guaranteed with exactly 4 weeks to go until the beginning of the Democratic convention in Chicago on August 19th. But in her first remarks to the country, since announcing that she does intend to, in her words, earn and win the Democratic nomination, she chose not to talk about her own candidacy, but instead the legacy of President Biden.
And I am firsthand witness that every day our President Joe Biden fights for the American people, and we are deeply, deeply grateful for his service to our nation.
Now, we also understand from the vice president that she will be heading to Wilmington, Delaware later today to meet with the campaign headquarters and the people there. As she notes, there is just 105 days to go until the election. So for more on all of this, Bloomberg's David Gura is joining us now from New York. So David, it's quite a picture to paint here. It's been less than 24 hours since Joe Biden's announcement that took many people by surprise. And yet, in that 24-hour time, we've seen Kamala Harris and her campaign raise tens of millions of dollars, and it seems like almost every single high-profile Democrat has gotten in line behind her.
It's remarkable how fast all of this has moved. So, yes, that letter we got from President Biden yesterday was followed in quick succession by his endorsement of Kamala Harris's candidacy. And then almost immediately, just a long string of Democrats getting in line supporting her run for the nomination. And we'll see sort of what shape that takes in the coming days. With just a few exceptions, a few senior Democrats who haven't signed on to it, most of the kind of rank and file in the party, in the House and the Senate, have done that, governors as well. Just fascinating to see. And going back to what we heard from Kamala Harris just a moment ago, I think that as fast as all this is moving you to, what strikes me is still this deference to the importance of the history here and what President Biden mentioned in that letter, that he intends to speak to the American public later this week to explain his decision. I think that might explain some of the hesitancy that we saw there from the vice president to begin campaigning in earnest outside of the White House today. I think we saw from her the same kind of nod to history and Joe Biden's place in it that we've seen in countless endorsements from lawmakers across the country. I think she's waiting for President Biden to button this up, if you'll let me use the phrase, before she moves ahead and begins to sort of campaign in earnest. But to your point, Kayleigh, about fundraising, just a remarkable last 24 hours here when you look at that Act Blue total of small dollar donations that have come into the Democratic Party, topping more than 50 million, the likes of which we haven't seen since, I believe, the day after Ruth Bader Ginsburg, the Supreme Court justice, passed away. Just a very strong showing for Democrats across the board, and certainly what seems like a ringing endorsement from a lot of the Democratic electorate for Vice President Harris's candidacy.
This story has been on fast forward for some time now, David, and I wonder, as we try to figure out the process, the mechanism through which the Democratic Party will actually use to nominate Kamala Harris unless something else dramatic takes place here, it's worth taking stock of the moment. We're meeting here on a Monday with, just over 100 days until the election. And this is something that most people who are watching us right now could not have imagined and don't remember from 1968. Put this in perspective for us as we try to make sense of these headlines.
Yeah, we look at that 1968 analogy. It's a good one, but recall that President Johnson made that decision much earlier in the campaign cycle. He made it in March, so there was a lot more time for all of this to play out. And indeed, there could be primaries to determine who would be the next nominee for the Democratic Party. That's not the case here. So, leading up to this, there was this swirl of worry or concern or just general, the novelty of this was really looming large. What would happen here? Could there be a mini primary? I think that we've seen some folks who've been agitating for that or suggesting that would be the correct course here, including Jim Clyburn of South Carolina, now endorsing Kamala Harris, perhaps quieting that. But you're right, Joe, to dwell on kind of the novelty or the newness of this. We are just a few weeks, as you said, away from that convention in Chicago, and we really don't know yet with any authority how all of this is going to play out. Nobody has put his or her hat into the ring to challenge Kamala Harris formally. That sort of leads a clear path for her to that nomination in Chicago, but there's still a lot of time in those 4 weeks. If we're living minute to minute, hour to hour, day to day, there's a lot of time for there to be something that comes in here and perhaps throws a wrench in all of that. But we had Tim Walz, the governor of Minnesota, coming in and endorsing Kamala Harris as well. He plays a very big role in the Democratic Party here. One would think that things are looking good for her to reach that nomination. And certainly Joe Manchin, the senator from West Virginia, was someone who said that he was thinking about running for president, thinking about challenging this process. He really made the rounds on television this morning at CNN and CBS and MSNBC, and we saw kind of an evolution in the way that he's approaching this. Initially raising concern that he wants centrists to be heard in this process, wants to know more about the policy platform of Kamala Harris. But as the morning went on, sort of stepping out from saying that he's going to run for president himself. So I think there must have been some sighs of relief within the Democratic Party establishment there.
David Gura, I'm glad you could be with us today reporting for Bloomberg. On this Monday after the news broke, we turn now to Seth Harris, former labor policy advisor to President Biden and senior fellow at the Burns Center. Seth, it's great to have you with us here at the table. Thank you for joining. You probably know Joe Biden better than anyone else we're going to talk to on the program today. And so I don't want to get too personal here, but I do. And what motivated him? Was the pressure too great for him to wait to speak to the American people, to do this in his own time, at his own pace, from the Oval Office? All we still have is a piece of letterhead.
Well, the defining character trait of Joe Biden, at least in his public life, has been resilience. He has suffered unfathomable personal losses. He has suffered professional setbacks that would have caused a lot of other people to go and lie in the fetal position on their beds. But he has always persevered, he has always continued, and he's always gone to work for the people he grew up with in Claymont, Delaware, and in Scranton, Pennsylvania, the middle-class, working-class families that he cares about so much, that he identifies with, and his family was that kind of a family. Mm-hmm. But there's an even more important trait about Joe Biden, and that is patriotism. He sees Donald Trump, I think correctly, and the Republican Party as an existential threat to democracy in the United States. And when he sat down with his top aides, Steve Ricchetti and Mike Donilon, and they showed him the data that showed that it was going to be very difficult for him to stop Donald Trump, he chose country over party, country over self, which, as you all know from doing this television show here in Washington, D.C., when you talk to a lot of politicians, that's not what politicians usually do. He chose to do the right thing for the country and for the working people of this country at great cost to himself. And I don't think it was that the pressure, I don't think it was the donors saying, we're not going to give you any money. It was that he cares about winning for working people. He cares about winning for democracy. It was, for me, personally, a very deeply sad day, but I've never been prouder of the man. And it's been my privilege to work with him in 2 administrations. He's a remarkable human being, and it's been my honor to be associated with him.
Well, it's a great reminder to us all, Seth, of just what Joe Biden has been as a public servant. We're talking half a century through surviving the loss of his wife, his daughter, eventually his son, Beau, continuing to serve through it all. But of course, yesterday, not just a decision to no longer continue that service, at least in the presidential capacity, but a second decision that quickly followed his announcement to endorse Kamala Harris as someone he thinks should take the helm and be the Democratic nominee. How do you view that part of